All right, how's it going, everybody? My name is Antonio. Today is Saturday, actually, not Friday, but I am still trying to become a grill master, which means that you're watching the CEO barbecue. I also have a new pen because I lost mine at PDEC. Someone stole it. I'm sure someone stole it. I'm going to go looking for it next year. Lengthy barbecue this week. Four companies, but four long conversations, mostly focused on North America, so obviously Canada, but jumping over to the US as well as Mexico. You see silver in the title, so you know there's going to be Mexico in here. A bunch of other metals too. You can call them weird, if you will, because I don't typically cover them on here. So there's niobium in here. There's platinum group metals, lithium, nickel, a bunch of that's silver, as I said. So metals that I don't typically cover on here, which means that I might not be able to ask all the right questions. And I know you're going to get mad at me. Feel free to send me an email, tell me how mad you are, or correct me in the comments below. I always enjoy these. But yeah, not being able to ask all the right questions doesn't mean I'm not going to try. So I will try. Talking about that though, before any of that, fair disclaimer and honest confession, I should not be listened to. I have no idea what I'm doing. Don't ask my opinion. Don't ask me, hey, are you buying? Are you selling? You shouldn't care what I'm doing. I've never made any serious money in this sector. Hence, I should not be considered any type of authority here. And the fact that I'm talking to these people, I call it grilling, but that doesn't mean I'm buying their stock, okay? And it by far doesn't mean that you should blindly do so either, unless you like losing money, okay? Don't use any of this as independent research, nor as investment advice. This is a YouTube video. You cannot use it as anything beyond. Just look at these as conversations, right? Is what they really are. Conversations is nothing more than general and impersonal, private conversations between two talking heads on the internet. So if you don't enjoy losing money, you should head over to setterplus.ca, where you're going to find the company's official filings, read them, eat them, bake them, put them in a cookie, and then talk to a professional investment advisor before taking your own decision in the end. Because the mineral exploration, development, and mining industry is among the hardest industries to profitably deploy capital in. There are many risks, stuff that you might not be aware of, and you will lose all of your money if you don't do enough research. Please be careful. Not kidding, although this sounds humorous, it is also serious. So, yes, there's also going to be these people, as I always say, literally run around the world, look for hidden treasures. So it's in their nature to talk with forward-looking statements and share their hopes and dreams and aspirations. So those are not facts. There's going to be forward-looking statements in here. Read the disclaimer that's on your screen right now. And again, please proceed with caution because none of us are soothsayers here. So again, please don't blindly rely on any of this. That all said, we're starting off with Plato Gold, which was requested by a follower on here, by the way. His name is Leonte, I believe. So hi, Leonte. And also for people listening, feel free to suggest any interviews either here in the comments or on resourcetalks.com or whatever. But the company Leonte requested is called Plato Gold, a gold, platinum, and recently also a niobium exploration company with assets in Canada and Argentina. Companies listed on the TSX Ventures Exchange under the ticker symbol PGC were an average of about 28,000 shares traded each day, with a 52-week high of 3 cents and a 52-week low of 2 cents. With a market cap of under $5 million and 230 million shares outstanding today, this is a 2-cent stock, which, by the way, means that the liquidity here is very low, so keep that in mind. There are 17 million options at a weighted average exercise price at 8.5 cents and 3.1 million warrants at 7 cents that are expiring this summer, resulting in about 250 million fully diluted shares. According to the latest SEDI filings, Anthony here owns about 33 million shares, or just over 13% of the company on a fully diluted basis. As of the last interim financial statement, which was dated September 30th, the company had just about $30,000 in current assets, sitting against current liabilities of almost $1 million, mostly construed by account payables to companies or parties related to management, which is something I hope can be discussed later on. According to the same financial statement, Plato spent on average about $15,000 per month on general and administrative expenses, rather low because the company was also not active in this period. As far as I understand it, there was no drilling happening over that 9-month period, although drilling did come right after that, and I'll talk about it here in a minute. Please do head over to the company's website, though. As always, also just go to setterplus.ca to review the most up-to-date numbers by the time you're watching this, because things change, and I'm also not your fact checker. Boring stuff aside, though, there are multiple projects across multiple jurisdictions here, as I mentioned. More specifically, the one property that's recently being drilled is the Marriott Gold property in northeastern Ontario, which is where the Abitibi Greenstone Belt is. And this property covers an area of 8 by 6.7 kilometers. The Abitibi Greenstone Belt is basically, you can think about it as a sort of a geological playground that's filled with a lot of drama. It's more drama than a soap opera and more gold than President Xi's basement. In barbecue terms, the Abitibi Greenstone Belt is like several different types of steaks being stacked on top of each other. So there's multiple mineralization events that we're dealing with. You can think about it as sort of a sirloin and on top of a Wagyu, on top of a Kobe, on top of a, I don't know, a T-bone steak or something like that. And they all cooked through millions of years of volcanic activities. And all of those layers were crossed by veins and veinlets, some of which obviously carrying precious metals. Plato's project here covers 4 properties, and its 2023 drill holes are about 10 kilometers away from Agnico Eagle's mining complex in the Abitibi as well. Only about 400 meters was drilled here late last year, though, and the assays reported early this year show some characteristics of rocks that are found in typical Abitibi gold deposits, but there was no significant grade to be reported in those 2 holes. Although historical drilling by the company itself, but also by other parties, there might be it is suggesting that there might be something deep below where those recent holes bottomed out at. So I assume provided capital can be sourced this year, this can also be followed up on relatively soon. But again, that's something I hope I can figure out more about in a minute here. Outside of this property, Plato also has an interest, as I said, in a niobium exploration project right outside of the Marathon, Ontario. So kind of in a neighborhood, at least in Canadian terms. And this is sort of becoming their flagship property, if you will. 9 holes for a total of 5,000 meters were drilled on the property in 2018, which gave Plato a 100% interest in the property. And it also showed that there is some niobium there. There was some grades reported, and geophysical surveys were also flown on it in 2022, which is now 2 years ago, showing that, again, follow-up drilling is needed to better understand what's really going on under the ground there and what's driving mineralization, again, to be discussed later on. Plato also has an interest in the Pick River PGM project, also in Canada, also in Ontario, actually, but technically in the Thunder Bay mining district. Some geophysics again on it, but no recent drilling to report on. And then lastly, they have a 95% interest in the Lolita precious metals exploration property, which is located in Santa Cruz. That would be southern Argentina. But again, given the state of the finances and the state of the junior market, not much is happening there right now. And that's where I want to kick it off actually here, Anthony, because I'm constantly seeing companies that are kind of struggling in this market, but I'm also a little bit confused by the whole situation here because you've been at this for sort of 20 years now, initially listing in 2003, I believe, 25 cents.
2005.
2005. Okay. Yeah, well, almost 20 years now. Stock is now at 2 cents. Share structure isn't looking great anymore. Balance sheet isn't either. Again, market not kind to juniors, but you're still sitting on 4 different properties, all with different geological theses. And I mean, you're doing rare earths now. So walk me through the strategy here and talk to me about what the way forward is in this situation.
Sure, absolutely, Antonio, and that's a pretty good synopsis that you gave. I want to add that we're kind of an unusual company in that I started it as a private company in 1995. I actually started it with the 4 gold properties along Golden Highway 101, east of Timmins, Ontario. If you want to drill down even a little deeper, east of Matheson, Ontario. Matheson's a tiny mining town southeast of Timmins, and our properties are located all to the east of that. They're all very well located properties. I picked them up from now, unfortunately, he's no longer with us, but Buzz Neal was a very well-respected prospector, and I picked up the 4 properties from him in 1995 after I met him. And they go from west to east. Guyboard, which is literally just a couple of kilometers on strike with the Black Fox mine that is now operated by, I think it's Manita. I'm losing track. It's flipped so many times, but we're very close to that. There was an old open pit once operated by Royal Oak, which is across the road from us. and of course the Hislop mine, which I believe Agnico Eagle now owns, but I could be corrected on that, is again right across the road from our southernmost portion of our property. Heading east, we've got the Harker property, which is very close by to the Garcon and John Paul deposits. Heading further east, we've got the Holloway property, which actually abuts, and it's now Agnico Eagles, Holt McDermott, and Holloway gold mines. These are historical producers. I'm not sure if they're producing right now, but Agnico Eagle acquired them when they acquired Kirkland Lake Gold, and Kirkland Lake and St. Andrews, who used to operate the mines before Kirkland Lake Gold, they drifted underground right up against our boundary. So well-located ground there. And then finally, our easternmost property is the Marriott property, which you described, in which we completed a shallow 2-hole drill program in November of last year. So there's 4 gold properties, but we lump them in as one, but they're actually 4 separate ones. Right along Golden Highway 101, the highway cuts across the northern portion of our Marriott property. And as you said correctly, both Plato and previous companies have found gold drilling on the Marriott property. Some decent hits, but along narrow intersections. This time, our 2 holes were about 200 and maybe 220 meters, if that, each, and they were at a 45-degree angle. So we didn't get very deep below surface. But as you may have seen in our press release, we hit some really interesting stuff. There's some blue breccia, which, we had put the photographs in our press release. And I've talked to a number of geologists, some, in their 80s, our 2 geos who worked on the drill program are PhDs. They've never seen rock like it. So the rock itself doesn't have value in that there wasn't any gold within it. But our geo actually did some historic digging and saw that in 1912, north of Matheson, a shaft was sunk, and there's a gold mine called the Blue Quartz Gold Mine. So we think that blue rock, might be a good sign. And there's lots of breccia, lots of sulfides, lots of quartz veining. In fact, our drill program located 4 splay faults off the Dester Porcupine on our property. So we've got all the stuff you want to see, except for the gold values. But, that doesn't discourage us because we're in the right area. And in fact, that property is about 11 kilometers on strike with the Holt McDermott Holloway gold mines, but it's also 6 kilometers to the northeast of the old Harker gold mine. So we're definitely in the right area across the Quebec border, which our property is on the boundary of. Cambior had a deposit, a gold deposit. So, we're surrounded by mines, but it takes a lot of drilling in this area. And to be frank, probably about 14 years ago, I did a number of option deals with companies whereby, they gave us some cash and some shares, and they agreed to do a certain amount of work. And if they completed the work, then they would get a majority interest in the property. We got the properties back. St. Andrew did work on Marriott, but they didn't complete it, so we got the property back. I am talking with some major companies about doing the work because, as you say, we haven't got the rich treasury, and the drilling in this area requires lots of meters drilled before you find something. So we'd like a deep-pocketed partner to actually do the heavy lifting, do the work on our gold properties, and then, we retain a small interest afterwards. So that's the strategy with our 4 gold properties, because we don't have the piggy bank
Right.
to fund, the exploration that's needed. But we think gold, it's off a little bit today, but as you know, it's been pushing $2,200 an ounce, and the fundamentals look pretty good for it. Fiat currency is getting weaker around the world, and gold in the various currencies is going up in value. And interestingly, while Bitcoin is hitting all-time highs, so is gold. So it shows that Bitcoin, although it's an alternative, and gold can make new highs simultaneously. They don't have to be one going up and the other going down at the same time. So I think things are looking good for gold. In fact, even young people, dabble in or are investing in Bitcoin. I think they're taking a look at gold, and in places across the ocean, China, etc. A lot of people have heard good things about gold. So I'm bullish. I think the metal's going to make new highs. And with that, because I call it King Gold, if the gold market's doing really well, then that gives a lift to the whole mining market. And so I think we'll get some large companies interested in taking a look at our properties because they're making good money. In Canada, gold's priced, of course, in US dollars, but you've got Canadian dollar expenses. So the cushion, isn't too bad in Canada. And I think the large companies will take a look at our properties one of these days. So that covers that. One thing also I will add to, and that is I actually hold my shares in Plato in a variety of different companies. And if you add all my holdings with various companies as well as me personally, I'm close to 60 million shares.
Oh, okay.
So I own I eat my own cooking. I put my money where my mouth is.
What's the average cost of capital for those shares, by the way? Do you know that?
Yeah. In my holding company, my average cost on the shares, my cost is about 3 cents. For me personally, my average cost for Anthony J. Cohen is about 6 cents. So, I'm not making any money in my shares. By the way, I haven't taken a salary in I don't know how many years. Virtually everything that we put in the ground. You mentioned the administrative costs. They are bare bones minimum for a public company.
Yeah.
We pay our listing fees, we pay our registrar and transfer agent, we pay our auditors, we pay the TSX registrar and transfer agent who we use. That's about it. We have great people, who believe in our properties, and they'll do work and they'll take shares. In fact, how I got some of my shares where I lent the company money, and then I took shares at the minimum price, which was 5 cents a share. Sometimes when the share price was 2 cents. So I've never taken advantage in terms of issuing myself, non-existent cost stock, like minimal cost stock. I've always done it above the market because, I think we've got good properties, and I think our properties one day will come into our own. By the way, I started the company, so I'm a founding CEO. I started the company actually in 1995 with those 4 Buzz Neal properties, and then we went public 10 years later. It took a while because Bre-X and a bunch of other scandals happened, which just murdered the junior mining market for many years. But
Anthony, that you mentioning taking sort of a debt for shares swap there. There's about $1 million on your current liability side of the balance sheet. What's is that the plan for it too? Sort of settle it in a debt for shares type of thing?
There's no rush with that. Like we don't have anybody knocking on our door. It's all insider loans and people who are loyal to the company. So we will do a debt for shares, but we're actually trying to do it, which is I guess, counterintuitive to some people, but we're actually trying to do it at a higher share price with less dilution. You know, we've, and I would add also that we've never consolidated. So our share price is true. You know, you got some companies that are 10 cents a share or 20 cents a share, but they did a 1 for 10 or a 1 for 20. So for original shareholders, it's like a 1 cent stock. You know, we have resisted doing that. I hate that. I don't think it's good, you know, for shareholders. If at all we can avoid doing it, we will. And so far, you know, since 2005, we have avoided doing that. I've managed actually to finance, even with some private placements at 5 cents and even once as high as 10 cents when our share price was much lower than that. So you know, we try and do things as non-dilutive as possible. And actually, when you look at the fact that we've been around since 2005 and have 230 million basic shares outstanding, that's not bad, because there's a lot of other companies out there. They might have 110 or 150 million shares outstanding, but they've done the consolidations. So actually, since they went public, there's a lot more shares out. So you know, we're trying to see where we can catch the market's attention with one of these properties, and that maybe leads me to our niobium property, Good Hope. We've had, actually, since we went public, I would say the majority of the years have not been good for mining exploration companies. You know, you had the 2007-8 financial crisis. At that time, our stock got down to half a penny a share. I actually loaded up in the market on a bunch of stock at the low price at that time. It did come back up since that time, I think, to about 6 cents or something like that, but then went down again. I'm sure you follow the market closely, so you know it hasn't been good for many years. There haven't been too many boom years for mining exploration, but in 2017, there were some green shoots. It seemed like interest was coming back into the market. So a prospector who I know named Rudy Wall sent me a gold property in Hemlo. And Hemlo, of course, rings a bell because it was one of the great gold discoveries in the 1980s. So I took a look at the property just because of where it was. But when I went to Rudy's website, I saw that he had a niobium property. And the response in my head was, what the hell is niobium? I'd never heard of it. So when I did a little research and I saw there's only 3 mines in the world and 2 of them are in Brazil, the third one is in Quebec, Canada, that intrigued me. And then when I looked and I saw it's a critical metal and it's used in everything from defense to steel to medical instrumentation, to being used on the chips of quantum computers, I started to get really excited because I thought this is a metal that the future revolves around. And then I saw that it's used, and some companies are using it in EV batteries. And, you know, whatever happens with EVs, I'm not a huge believer personally, but you know, they are an increasing share of the market, and niobium has some fantastic qualities for the batteries for EV charging. So that got me very excited, and I did the deal on the Good Hope niobium property, and we wound up meeting all the obligations of the option deal. So now we have it 100%. And as you said, we drilled 9 holes, and all 9 holes hit massive carbonatites. Carbonatite is the host rock. Within the carbonatite, there's pyrochlores and apatites, and those rock host the niobium. And there's niobium in every single hole. And there was, interestingly, phosphate in every single hole, too, in the apatites. And we got some pretty good grade phosphate, as well as some pretty decent grade niobium. So what we need to do is we need to get financing to drill more holes, because it's a heterogeneous deposit, you could go 10 feet over, drill, and get a different result. You got to put down some holes. But when we did the flyover in 2022, it identified the massive carbonatite deposit. You see the big footprint. So, we've got 250 million tons of material. It's open and it needs money. It needs drilling. So, how am I going to get that money? I'm dealing with unconventional sources, obviously not loans because we don't have cash flow, but I'm dealing with unconventional sources for money. And, I'm persistent, so I'll just keep on knocking on doors and seeing what I can find. I think this will come into its own because niobium is used in hypersonic warfare. And this is the future of the military in terms of what's happening in the globe. And niobium is the valuable material that's used in hypersonic warfare. You can also see that Elon Musk, his SpaceX, uses it. It's got such tremendous strategic uses. It's just right up there as one of the most valuable critical metals, and so few people have heard of it. So few people in government. It's incredible. I'm a bit of a convert to the metal, as you can see, but I just think it's the future. And of course, quantum computing, which Canada actually is one of the leaders in. It's used on the chips of some of the companies that develop these computers. And when they're perfected, everything I read says that they'll make today's most quick, fastest supercomputers look like abacuses. It'll be millions of times quicker than the most sophisticated computers that we've got today. So, you can just imagine advantages to the countries and militaries that have this. So, I'm not holding my breath, but I think our niobium deposit is going to get the dollars that we require to develop it. I don't know when, I don't know how, I don't know who, but it's going to happen because it's obvious, because about 93% of the world's niobium comes from Brazil, which is great. It's a great country. I love it. I love Rio de Janeiro. It's one of my favorite cities, but it's single country risk. And, I had some meetings in Europe, and for example, one of the German departments identified that as the number one risk factor for this metal, single country risk. So, I view our deposit as a insurance policy for whoever's interested, because one thing with all our properties, Antonio, and this sort of separates us from a lot of people. We are near either producing mines or former producing mines. Therefore, we have infrastructure by every single one of our properties. We've got highways. For example, our Good Hope niobium property, we've got the Canadian Pacific National Rail line that goes by us. We're right off the Trans-Canada Highway. Hydro One just built new transmission lines, so we've got electricity. We got a very famous mining town, Marathon, that we're 25 minutes outside of. We got 2 deep water ports, Thunder Bay and Marathon. We've got a mining community, a mining culture. We've got just everything you could want with that property, and with our other properties as well. So niobium, just to finish off, it's not quoted on an exchange or anything like that. It's kind of similar to uranium. It's a contract metal. So it's a contract that's made between the end user and the developer of the mine. So, you can't get a public quote on it like you can gold, copper, silver.
That's right. But as you mentioned, you have a couple of properties there, and I want to talk about what's been happening more recently, and specifically the gold thing, the gold core, you can call it. I cannot call it a gold core because there's no real gold in it. But I'm glad you brought that up, because I looked at some of the holes, and the
Yeah,
presence of, as you mentioned earlier, the presence of the blue breccia and the black
yeah,
clasts that are sort of
yeah,
up to 10 centimeters in
yeah,
diameter, if I read it correctly,
yeah,
that was interesting to me. But that breccia that you drilled is also filled or held together by something brown that's apparently made up of 35% sulfides. And then there's
yeah,
the colorization in combination with
yeah,
the threefold zones that are set up in
yeah,
gabbro and massive basalt, I believe, all of
yeah.
which at the same time also crossed by quartz carbonate veins, right? It
Yes,
sounds like a word salad, but those are all indicative of
yeah,
there being gold, basically. But in your holes,
yes.
there wasn't any gold. So what's all this telling you? Where are we in this potential system?
Well, there was, interestingly, there were anomalous amounts of copper and nickel, which you might have seen. Which is really interesting because uh, I can't, but I don't know that we've assayed previously for that, in that area, because we're always tight for money. So, usually we assay for sure the most likely metal, which is gold, and maybe a couple of others. But it was interesting, with the bluish stone, there would be anomalous amounts of copper, albeit, small. I'm not a geologist, so, I know enough to be dangerous, but to me, and this is just from experience and being around and talking to a lot of people and a lot of experienced people who know a hell of a lot more than me. I think we've got to go deep, but deep means expensive. And that's why, I think for a major, it makes a lot of sense because they can see that there's a rock salad there. We got so much going on beneath the surface. We've got gold hits, historical gold hits on the property, and we're near a bunch of mines. So, there's no guarantees in life, but we're definitely in a very interesting spot. So, I'd love to see a major say, you know what, Anthony, we're going to drill 10 1,000-meter holes,
Hmm.
whatever spacing their geos choose, and see what the hell we find. It's a hell of an interesting property. It's a pretty good sized property. And, you never know. Like in Hemlo, which I mentioned earlier, Murray Pesum hit one of the great gold finds in the world on the 76th hole. So,
Hmm.
you got to be persistent in this business. You got to find money. That's what it's all about. And, again, no guarantees. But, if you're around where there's former mines, sometimes great things happen. You look at Barrick, as you may know, it used to be a junior oil and gas company. But there was a geologist, Smith, who captured founder Peter Monk's attention with his theories, and they picked up the property in Nevada, which was in the shadow of the head frame, so to speak, of Newmont's huge mine in in Nevada. And then, of course, they made the fantastic discovery, which made Barrick. So
Yeah.
a lot of the time, the great discoveries are made next door to other discoveries, and
It's true.
sometimes, are even greater than them. So you need the
That's a
money.
good point there because I do want to talk about that because I'm
Mhm.
wondering where all of this is coming from. And you're close to Agnico's camp down there. And so the size and the composition of those black pieces or clasts, as we called
Mhm.
them previously, as well as the blue color of that stuff that's in the breccia, that's sort of the notable thing to me. That's what I noted. I'm not a geologist either, but that could basically, as far as I understand it, that could mean that they're unusual minerals. They're driving that
Yes,
colorization, stuff like that. Any idea whether they're
correct.
coming from anywhere close by, or is this a wild card and something new in the geology here?
I had lunch on Friday with an 80-year-old geologist, well, early 80s. So he's seen a lot. And when he told me he's never seen anything like that,
Hmm.
that spoke to me. He was actually president many, many years ago, like decades ago, of a gold company in that area. So if this guy in his 80s has never seen anything like it, it's unusual.
Hmm.
And uh and like I say, my geo on this did some research and found this blue quartz gold mine north of Matheson, which began producing in 1912, not 2012, 1912,
Mm.
so a long time ago. So I've talked to probably 6 or 7 geos plus our driller, and nobody's ever seen anything like that. So it does seem to indicate that maybe there's something interesting going on there. But in this crazy business, as you know, you just don't know until you drill, you assay, and of course, all that takes money. But it's beautiful looking rock. It's for your viewers who haven't seen it, go to our press release and you'll see it's bright blue, very unusual.
Yeah. Yeah. What is this the first time that you're encountering the massive basalt, the brachiated basalt and the gabbro units, or is this looking more like a trend?
Uh, I don't I don't feel comfortable answering that because I mean I can say this. In previous drilling in the area, it's the mafics and ultra mafics, greenstone, more conventional, of what you are prone to see, with some quartz veining and some sulfides, pyrites, but this is so different. I'm kind of lost. I don't know what we have here other than it's very unusual and promising, I would say.
Well, exactly because it is unusual, I'm sort of trying to wrap my head around where it might be coming from. Because if it comes from the neighbors, basically, that can get more promising. If it's a wild card, could get more challenging to explore it.
Yeah.
Just like, for example, the quartz carbonate veins. You said you're not a geologist, so but I mean, feel free to cut me off. But thinking about the orientation of those veins and whether there's a trend that could also tell us more about the structural controls of the mineralization or the direction where they might be coming from.
Well, we've got the Destor Porcupine fault, the Destor Porcupine fault going right across the northern part of our property. That's been mapped, that's shown. And these other faults are splay faults off that. So, it's to the north of this. So one would think that, maybe this stuff is coming from the north, where the major fault is. And so the liquids, when they were running up the rocks, billions of years ago or hundreds of millions of years ago, it would be coming from that area. And of course, to the north is where we've had some gold hits. Again, nothing to write home about, but a couple grams here, a few grams there. So, I think it just takes a good experienced geologist, a good drill company, and following this. And I'm in a way an amateur, but I would sure drill where we just drilled, and I would go deep if I had all the money, because I would, and the geo would have to look at the IP work we've done and at these drill holes and figure out the angle, because of course the azimuth is really important in drilling, because well, one, you have to put down some holes, but after you do, you get sort of a feel for, is it like this? Is it like this? Where is the gold? So, but as a overview, I would drill where we just have. I just drill deeper. Maybe I'd change the angle a little more, but I think we've got something very interesting. I just hope a major finds it as interesting as we do and puts up some money.
As I said previously, though, it just drilling deeper. I want to better understand where that's coming from, because the presence of those quartz carbonate veins and the alteration
Yeah,
connections tells us that there were probably multiple phases of mineralization here, regardless of where it's coming from.
yeah,
It's making exploration a bit more challenging. And so ultimately, I don't know. I barely know what any of that means. But even if I knew what that meant, it basically means that you just need more. You need more than just to see these rocks to follow it up, basically. So you need to use geophysics or geochemics. And I can see that there is sort of a stratigraphic unit trending towards your neighbors again, who already have a deposit.
Hmm.
But I don't necessarily know if that's of any specific significance. So maybe you can talk to me about that. Are you using that in decision making too,
W-
or how
w-
do you look at it?
w- Well, our Geo is a PhD. She's run some IP programs. It's her opinion, and you know, I bow to her because she's got the experience. But it's her opinion that we should go deeper in this area.
Okay.
She thinks it's very, very interesting. And by the way, her husband is a PhD. She consults with him, and he thinks so as well. So, you know, I'm not going to question two people with a lot of experience in the area, as well as their doctorates in geology. They think it's worth going after. And uh, well, I can't say too much, but they feel quite strongly about it, and in a way that I respect.
Right. Okay. Fine. Yeah, that's well, they're interesting looking rocks to say the least. Maybe we can do an interview with the geos too. I'll probably be lost at that conversation too though, um but then again, okay, all of this deeper holes and all that, it
Yeah.
just takes and it will keep taking more time, right? So I have to go back to the beginning of the conversation. You've been at this property for, as you
Yeah.
said, quite a long, well, basically longer than I've been on this planet for. When
Yes.
and how do you think you'll be able to monetize it?
Well, I think, you know, one thing that helps, and I've only experienced it very rarely in this business, but a good time in the market, you know, when money loosens up and is available to fund what is a risky business. And, you know, it takes, it's funny, it takes discoveries, and it doesn't even necessarily have to be in the neighborhood. It helps if it's in the neighborhood, of course. But, you know, if you get a large mineral discovery in a country, that fuels a lot of interest. And, you know, we haven't had too much of that. Uh, so, and one thing in this business, we use all the material, so we have to replace it. And there hasn't been a lot of investment in the last 10, 15 years. There really hasn't. Plus, what has been raised, you know, major discoveries are few and far between. The low-hanging fruit has been captured. So, you know, I think that things will, I have to be an optimist. I think things will improve. I think the viewpoint towards the industry will improve as people understand that for a lot of technology, a lot of these new things that they like, whether it be cell phones, EV cars, etc., you need metals, and you need a lot of them. So I think the industry will come back. Uh, we're patient, and we can wait until times get a little bit better. But we're not just sitting around waiting for that. We're
Mm,
talking to major companies, we're talking to governments, we're talking to unconventional sources. So, you know, we're doing our best to make something happen. But, you know, it's not easy, never has been, probably never will be.
sure. Your exploration permits for well, for all three of your Canadian properties, are they not expiring in November this year, I believe, or something along those lines?
Well, for Marriott, we have uh, we just got a 3-year permit, so that's fine. In terms of Good Hope, I don't know off the top of my head, although I thought we got a 3-year permit for that, as well as Pick River, but I'm not going to swear to it. We've got quite a few things going on, and I can't recall everything at my fingertips. But I think we're okay. I don't recall that we're under any sort of deadline. Um,
Because I saw a news
And
release in 2021, basically, that you had reapplied for all the permits and it said 3 years. So that's
right, but that was COVID, and everything got just stopped, during COVID. So we heard back once everybody, I don't know if they're back to work or working remotely or whatever, but I think we got our 3-year permits, but like I say, I can't, uh,
yeah.
I just think if we didn't, I would know that, and I'd be after them, but I think we do have them.
Right, but the
I
idea where I'm coming from with this is
Yeah,
the idea would be for you to keep applying for permits and just hold all of your properties, wait for strategic on one or two of them. So you're not
yeah.
necessarily planning on dropping any of the properties.
Oh no, and we've spent a ton of money. We spent well over $1 million on Good Hope. So we have reserve credits on Pick River. We spent over $250,000. So we've spent respectable amounts of money. So in terms of that, yeah, no, we're not going to lose anything because of not doing any work and losing the claims. No. Plus, 3 out of our 4 gold properties are leases. So they've been brought to lease.
Hmm. Okay. What if you, why not sell three of the properties that you have? So the one in Argentina, the two other properties, and then focus on niobium if that's now your flagship asset.
Well, make me an offer, Antonio.
Is that
Uh,
it? So if someone comes along, you're selling it?
no, but I'm a businessman, so I
Hmm.
just look at, what I'm faced with, and if I think that it works for both parties, I'm open. Um, if we can segue into Argentina, that this was brought to me by a geologist who I respect a lot, Dr. Paul Lotka. Paul lived in Mendoza for 23 years, so he knows the Argentinian scene very well. I don't think it's too much of an exaggeration to say he knows just about everyone in the field down there, and they know him. He's been at it for a long time, and he's been involved in some pretty significant discoveries down there. So when he brought me the Lolita property in 2007, I said, yeah, I'm interested. So we did a deal, and no one had ever done any work on that property before. It was a virgin property. So Paul did a couple of prospecting missions. He did geochemistry, took a bunch of rock samples, etc. And incidentally, there's infrastructure around there as well. There's water. So we did the prospecting in geochem, then we did a mag survey, then we did an IP survey. We identified some humongous geothermal structures on the property that, when I say humongous, they run for kilometers, so they're very good size. And to our western boundary, there's the El Gateado and I'll remember the name of it, but anyways, two precious metals deposits, gold and silver. To our south is Sierra Blanca, another gold silver deposit, and on our southeast boundary, El Pinguino, which is a polymetallic deposit, so gold, silver, and base metals. And the trends go from southeast to northwest across our property and those geothermal structures. When Paul was doing some geochem sampling, he found just humongous anomalies for trace metals, at surface. There's a little bit of gold and silver, but nothing too exciting to speak of, but tremendous amounts of mercury and antimony and arsenic. And in Paul's experience, there have been some big discoveries made with very little gold or silver at surface, but some good indicator metals. So or minerals. So anyway, that property, just because of the pedigree of the geologist, I think has a lot of upside. And, the politics in Argentina are always changing. That happens to be the best province in the country historically to operate in. There's a number of mines operating there, Cerro Negro and others. But we think it's a property that's, could be potentially a company maker. It's another big property. And, we'd be very open to doing an agreement with a major. And so, we're the gold and metal, the gold and silver market is improving. Maybe we'll be able to do something one day. Maybe someone will come and make us an offer to buy it. We don't know, but it's a good property.
But what about the meantime? I mean, looking at some of the capital raises that you've done before, this sort of $150,000 type of, they're
Yeah.
G&A capital raises, right? You're raising money to keep the G&A going. How long do you keep that up for? Because at the pace that this is being going, you're now at $4.5 million market cap. You do, 2 or 3 raises of those, and then you're diluting 10% each
Yeah.
time. So how do you proceed in the meantime?
Well, you again, you look for sources of financing who can come in and write a check for a couple $1 million, and that's what we need. So that's what I'm trying to do, and I'm trying to coordinate it with maybe an improvement in the metals market and the outlook for the metals market. That's all I can do. If I could magically write a check for a few $1 million, I would.
Well, if you figure that out, let
Incidentally,
me know how you did it so I can start doing it too.
yeah. Well, incidentally, just so you know, I financed the 2-hole drill program in Marriott. So, that was me lending the company money.
Okay.
So, listen, if that beautiful blue breccia yielded 23 grams of gold over 20 meters, problem solved. But you can't, as you say, with a glacial pace of raising money, 100,000 here, 300,000 there, it's very hard to make a lot of progress unless you get exceptionally lucky, and you can't really bank on that. So we need, I realize, large dollars, and that's who I'm trying to go after. And the governments on both sides of the border, that is Canada and the United States, have made a lot of noise about critical metals and the need to develop those. But practically speaking, the programs aren't there yet. Any program that exists is very cumbersome, small, and not the type of program that's needed, because typically they're for things that are at the feasibility stage. And if something's at the feasibility stage, really, the companies can get money from all sorts of different sources. They don't necessarily need the government. So, we think that there should be somehow, somewhere, some high-risk capital for, exploration stage properties where we know that there is something there. We just don't know how much. And that's high-risk stuff. But, high risk, high reward. That's the only way you're going to find major new deposits. So if I can just move over to our last property, which is Pick River. There's a company called Generation Mining who have a number of permits in place to develop North America's next platinum, palladium, and copper and gold mine. Also Marathon, Ontario. And who I mentioned previously, Rudy Wall, the prospector. Rudy picked up a strategic bunch of claims that touched the western boundary of Generation Mining. So I wound up doing a deal with Rudy for that, and we picked it up. And we did a flyover in 21, I believe it was, and showed a number of anomalies. You mentioned gabbros. The gabbros on Generation Mining's property are the host rock for their platinum group elements, and copper and gold. And the gabbros actually flow over onto our property. So we've got the right rock lithology, but it's rough country. Like you got to be dropped in by helicopter, or there's some places where you can go in on an ATV, but it's very rugged, hilly, tough country. So we've done a little bit of work, but not too much. Like I say, about $250,000 worth of work. But one thing that's very interesting, I think it was the end of January this year, Generation Mining picked up a whole whack of claims that now border us on our southern boundary. So all of a sudden, we border them to the east and to the south now. And they announced on March 7th a new drill program looking for copper on their property. And one of the areas where they're looking is near us. So that's, it's nice when another company does the drilling, and then if they get good results, you get some of the flow over from that. And, to be clear, there are 3 open pits, which are the feasibility study for their mine, are on the eastern part of their property, so far away from us. But on the western part of the property, they've got a couple of copper deposits. One is called Sally, and those are within a couple kilometers of our border. So we're pretty close to their copper indications. So we wish them all the best. We hope that their drill campaign this year is successful with the copper.
How would you prioritize everything that you're telling me about here if someone came along or a magic check was possible? You all of a sudden have $1 million.
Yeah.
Where do you put it? You started niobium because you said that's your flagship.
Yeah,
Where does the rest go?
we would put it in the niobium because
all of it?
That's we'd probably put just about all of it in. $1 million, unfortunately, today doesn't buy that much. And we know we've got a massive carbonatite deposit there. We know from the previous drill programs we hit niobium and phosphate values in every hole. So we have a good idea. We have targets. We know where to drill. And if those targets brought us some joy, then that would enable us to finance the company and move forward. So I think it's without question that would be where the money would go.
Okay, fair point. I typically ask you, like, if you're not taking a salary, you're not making money on this stock, what do you live from? But I also noticed in the SEDI filings that you're an insider of another public issuer, in that be Gulf and Pacific. It's a real estate company, I believe.
It's a development company. Yeah,
okay.
It's a shopping center development company.
Okay.
And so I'm controlling shareholder in that. I'm also controlling shareholder in a bunch of other businesses. So, luckily I don't have to eat from mining, but I also, have invested a lot of money in mining. So, it's not a charity. I want the mining to pay me back. So.
But I was going to ask you what sort of the time and attention split is, because developing shopping centers doesn't sound like an easy feat. So what's your time split between this and Plato?
I work 7 days a week. Whatever comes in front of me, I take care of. So I just manage my time. I think reasonably well. It's a good question, but nothing that I'm involved with takes all my time. So I just divide my time by priorities and what needs my time. And if there's a large development, let's say with a mining company that's interested in one of our properties, that's going to get my attention because that's a multi-million-dollar deal. And it's going to benefit me. It's going to benefit our shareholders. I should add also that although I own approaching 60 million shares of Plato, I've got some very close friends as well as family members who have large stakes in the company. So we've got, although there's about 230 million or so basic shares outstanding, we've got almost 3/4 of it in tight hands. So I've got an obligation to those people as well as myself and my family, to make something happen. I'll also say that there were periods of time when, you could stand on your head or, ride a unicycle and juggle, and no one would pay any attention to you as far as the mining market. So, I find being diversified in my various interests serves me well, because you rarely have everything doing well and being busy all at the same time. So that's
Sure.
how I handle it. And it works for me.
All right, well, thank you, Anthony, for the overview here. Not an easy time, so I hope we can catch up again in the future and you tell me everything's going better. But for now, I am looking at silver. We're going to keep it moving with a trip to Mexico and Nevada, actually, kind of at the same time. Challenging, yes, but we're visiting Reyna Silver, well, as the name suggests, a silver exploration company with 2 assets in the US and 3 assets in Mexico. Companies listed on the TSX Ventures Exchange and the ticker symbol RSLV, where an average of about 300,000 shares trade each day, with a 52-week high of 25 cents and a 52-week low of 11 cents. With a market cap of $18 million and 150 million shares outstanding today, this is a 12-cent stock. There are 5 million options, striking at 80 cents, as well as roughly 40 million warrants with a weighted average exercise price of, give it or take it, 40 cents, according to the last financial statement. Board management and advisors hold over 17% of the company, whereas MAG Silver owns 7.3% of the company, leaving 12% for institutions and 63.5% for retail investors. As of the last interim financial statement, which was dated September 30th, the company had almost $1.5 million in current assets, most of which in cash, as well as about $700,000 in current liabilities and no long-term debt. The same financial statement also shows that Reyna spends on average about $200,000 per month on keeping the lights on and the marketing formed, whereas over that same 9-month period, on average, $620,000 was spent per month on exploration, about a quarter of which specifically on drilling, and that was in the US, leaving the overall G&A to drilling cost ratio at a little over 1:1 for the third quarter, or for the 9 months, the first 9 months of 2023. Again, not including geological consulting and other geology-related costs. Basically, it's just the drilling. Please do head over to the company's website as well as setterplus.ca, though, to review the most up-to-date financial statements by the time you're watching this, because the financial situation has changed since this report was published, because Reyna has been out raising capital, specifically getting $4.4 million in an upsized 12 cents financing with a full 3-year warrant at 20 cents. Numbers aside, though, as I mentioned at the beginning, they have they're focusing on 4 projects. There's a couple more projects in the portfolio, but they have 4 projects in total, 2 in Mexico and 2 in the US. Brief overview, or at least I'll try to do a brief overview of those projects, starting with the newly signed Griffin project. That one is in the US, that Reyna Silver now has under an option agreement with Reyna Gold. Okay, so this project can basically become their, 70% of it can become theirs if the 2 companies spend a total of $9.5 million on exploration between now and April of 2027, effectively 3 years from now, on an upward sliding scale type of basis, as well as make cash payments of $1.1 million in total and issue 1.2 million shares each to Griffin's current owner, who will then still retain a 2% NSR royalty, 50% of which is buyable. Why the interest here? Well, this is an over 10,000 hectare large package, so it's an 8 by 16 kilometers of ground sitting between 2 famous trends in northeastern Nevada, which that of course being the Battle Mountain and Carlin trends, and this being a Dr. Peter McGaw supported story. You can also guess that this is a CRD exploration target, but you might be surprised to hear that it's not only that. The structures on this land package are interpreted by Reyna as showing strong evidence of having undergone multiple mineralizing events, dating as far back and as deep as Carlin-style type mineralization, but also stratabound nickel-zinc mineralization. This results in the potential for a polymetallic deposit, which would obviously be hosting lead, zinc, silver, but also then potentially gold from that Carlin style and critical mineral. So think nickel and copper. Is that too complex of a mineralization system, though? Well, I hope I'll find out in this conversation. But historically, this project was only tested as a potential Carlin-style deposit by the likes of Agnico Eagle, who intercepted gold in 9 out of the 12 holes, but never followed up. Why? Well, again, I hope to find out later on. Griffin is not the only CRD potential deposit that Reyna is after, though, which, and by the way, if I had to explain it in sort of in barbecue terms, because this is the CEO barbecue, imagine a very hot sort of stove, a hot plate, if you will, in which you put up a piece of, say, garlic butter, and you're going to let it get very, very hot. When it's all melted and it's like 400 degrees, you throw it on a plain old boring steak with no salt, no pepper, nothing on it. You're going to let it drip, permeate the steak, and it's going to deposit sort of a garlicky taste in your steak. Then you're going to go ahead and do the same, but you're going to put another piece of butter. This time, let's say it's orange butter or something along those lines. It does the same, permeates the steak, and it adds an orange flavor to the already garlicky steak. Then you do it again, third time, fourth time, whatever. This time it's another type of flavored butter. Drips, permeates the steak yet again. So essentially replacing the old boring taste of a steak, I suppose, with the new exciting taste of garlic and butter and orange or whatever else, hence the replacement part. So the steak in this case are limestones or dolomite, also known as carbonate rocks, which is where the sea come from. Those are also known as just the most boring rocks you can imagine. Okay, then the garlic butter, the lead is the lead. Let's say the orange butter is the zinc, and then the other butter is the silver, and sometimes that could also be a gold-rich fluid type of thing that are also deposited into the carbonate rocks over multiple cycles. And so those metal-rich fluids have been sort of heated up by a hydrothermal system in this case, which in my sort of childish example here is the stove on which you heated up the butter or the sauces or whatever you like. And that could, for example, have been a porphyry stock, not necessarily that stove, but it could have been a porphyry stock, that heat source basically. And so those metal-rich fluids have now replaced the original minerals, typically calcite or dolomite, I believe, is what you find in carbonate stones, with valuable minerals like, or hopefully with valuable minerals like, again, lead, zinc, silver. Importantly, the way you find your steak, if your cat or your dog stole it and dragged it somewhere else, is by following the traces of sauces or butter, for example, which in this case is the scarn of the system. That's something that you'll probably hear us talking about later on, so it's worth pointing out. But point here is Griffin is not the only one of this type deposit that Reyna Silver is after. They also have Medicine Springs, which is also in the US, also in Nevada. And here, sort of all of the initial boxes on Dr. Peter McGough's checklist have been checked with one of the holes drilled in 2022, returning over 1 kilogram of silver with some lead and zinc in there, over 2.4 meters, and another one returning 7.4 meters of 186 grams of silver per ton with more lead and more zinc. And this is where most of the money that was spent on drilling and other exploration activities for the first 9 months of the year that I was telling you about went in last year. And this is also where a lot of, or well, some drilling at least is going to go for 2024, as far as I understand it, but again, something to talk about. There's another CRD target that Reyna controls, that's Gigi, that's a bit further down south from Nevada, which is in technically Mexico. More specifically, it's the Santa Eulalia mining district, so sort of a very large, high-grade, historically producing silver, lead, and zinc district, with some very notable high grades as well. Drilling at Gigi shows 2 types of mineralization so far that might have been active here over historically, basically. So the limestones, essentially the boring steak that I was telling you about, is here. Potentially acting as a host rock. 0.5 kilometer of intrusive hosted mineralized skarn was also intercepted. Remember the traces of flavored butter. That's another one of Dr. McGough's checkboxes. And then on the upper level, silver-bearing sulfide veins were also intercepted. And the source is not yet found here, not even historically, because all the historical production comes from basically a couple of skarns, those butter traces. CRDs are not the only thing that Reyna is after, because they also have the Battle Pilas project, which is in the Chihuahua state of Mexico, another historically producing district that notably had silver mineralization hosted mostly in silver, which basically means native silver, kind of like a steak packed in steak, if you will, which sounds like a good steak, to be honest. But native silver, Mexico, not CRD, so you're probably guessing it, but this is a high-grade, narrow vein target with some intercepts showing, again, very narrow, so 0.2 meters or 20 centimeters of almost 6.5 kilograms of silver per ton, whereas other zones have returned up to 30 meters of much lower grade, but not necessarily low grade, of 218 grams per ton of silver, and some zones have even returned gold from here. So grade and width variability is also something I hope to be better informed about by the end of this conversation. Now, all of this is not completely, but a little bit maybe on the back burner, since the Griffin property was signed under that option agreement, which is where I want to pick it up from. Because Lauren, this new project that you have that you're JVing with Reyna Gold on in Nevada has allegedly had multiple mineralizing events that sort of overlap. Not unusual for the area, but doesn't that create sort of a more complex system, if you will, that would be more challenging to explore or target? And if it does, how do you plan to pick and prioritize drill targets here?
Well, okay, that was I really appreciated the breakdown of the company. I'm a little concerned that you're hungry, but I did
Yeah,
appreciate the steak analogy. It's close to what's going on here, though instead of permeating down in, it's actually not just a flavor replacement, but it's on an atomic level, it's a one-to-one replacement between a carbonate unit and a metal. Um, the way that I kind of like to think about them, and this makes a little bit more sense for Europeans because you guys have a functional public transportation system,
mm,
is like their public transportation system. So when you were talking about each packet of butter that's going through, I like to think about that as like the bus leaving the terminal. And that terminal is like your porphyry system, right? So you have this intrusive system that comes up, porphyry in this case. It could be economically viable or not. Um, but what really matters is coming off of that is that juicy fluid, that butter, or in this case, in the way that I kind of like to think about it, a bus full of metals. And it's this acidic mineralized fluid. And the acid's actually the important part. Because it's acidic, when it comes in contact with the carbonate, you have this receptive host rock. You can think of it as the magic host rock, as it were, because carbonate, which you described as being boring, simultaneously, that's also basic. So because of that, you have this acid-base reaction. Did you ever make one of those paper mache volcanoes as a kid
sure.
with
Yeah,
vinegar and the baking soda?
yeah,
So we're having that same reaction happening underground. And that's what's causing the precipitation or the deposition of the metals that we care about, right?
mm,
Lead, zinc, silver. And it's not just a single packet of fluid that's coming through that's like, oh, this is my lead bus and then this is my zinc bus. A CRD system is a diversified system. And so one of the cool things about it, and kind of what makes them special from an economic point of view, is because every time those buses full of metals leave the system and they're going along the bus routes, and the bus routes sort of like your structure, your fractures in your rock, your plumbing system. And so when that packet of fluid leaves, when that bus leaves, the metals drop out in different neighborhoods. So, because that's where they work or that's where they live. So when you're close to the bus terminal, you're in your downtown area. That's like your scarn system
mhm,
or portion of the system. So there you're going to have a neighborhood that's more copper, gold, lead, zinc. Your silver grade will be lower than it is outboard, but that's where everything's voluminous. As you make your way further in the system, that's when you're in your suburbs. And that's when your silver grade goes way up along with your lead and your zinc. And at the very end, the elements that fell asleep on the back of the bus, those are your trace elements, right? They
mm,
get kicked off at the end, and those are your smeared steak, as you described it, with the dog dragging it, right? And so one of the reasons why I spend a little time to point this out is one of the cool things about geology, and particularly something like Griffin, is that those big bus routes where the public transportation is taking advantage of, those are also like your main highways, right? Those are your main structures, your main plumbing, your main routes of transportation for your mineralizing fluids, whether that's CRD, so silver, lead, zinc, or something like Carlin. And so one of the things that we got particularly excited about with Griffin is that we see there's historic production for the CRD mineralization, small scale, 1870s. But what we also see is evidence of Carlin type mineralization. And what you can think of with Carlin, or sort of how we've been workshopping, approaching it from how explaining it to people, is you can think of Carlin mineralization being like a bunch of little cars going out,
mm,
right? your cars are still going to use those main pathways, but then they're going to go more dispersed. They're going to go further out in the suburbs, right? They're, and that would kind of make sense in terms of a lot of these systems tend to be lower grade, but as you get closer to those main structures, once again, your grade goes up. So our premise at Griffin is if we can better understand the structures, we can better understand, the routes of mineralization, whether that be the CRD style mineralization or the Carlin style mineralization or both, because the big systems, the ones that matter, the big deposits, you get multiple events overprinting on top of each other because that is a site of pathways, right? Like you look at, say, London, for instance, right? You can trace back, cart roads to Roman roads, and you can start stacking these things, and they'll actually, sometimes cut into them, and they'll see that you have multiple stacked events on top of each other. So in the case of Griffin, as we currently understand it, and we're currently pulling these pieces apart, we're watching what our neighbors are doing as well. So south of us, I-80 Gold went to the historic CRD district, Eureka, where most recently people have been focused on the Carlin mineralization because it produced like over 11 million ounces of gold. And, there the focus has been on Carlin. Like it has been in the entirety of Nevada. Everyone's been really hyper-focused on the gold mineralization. And yet the CRD mineralization is there as well. And so when they've tapped into that, they're better understanding the system as a whole. And it also allows you to then vector into the other component, which is the porphyry portion of the system. And that's one of the things that they're looking at right now. And so our idea at Griffin is rather than get too focused on one element, get too focused on a single group of trees, instead look at the whole system, the whole deposit, because that's how big discoveries are made. And that's how this group of geologists, our technical team, have made major discoveries. In the Fresnillo district with the discovery of Juanicipio Valdecañas, with looking at big scale CRDs in Mexico and discovering Cinco de Mayo, or looking at really high grade systems and discovering Platosa. Putting these pieces together and looking at the full system allows you to make the kind of discoveries that actually make a big dent on the market. And, that's our goal there. And then in terms of metallurgy, one of the things that we get to benefit from, we get to watch how Eureka, down with, I-80, handles that metallurgy. And one of the cool parts about CRD mineralization is because the mineralization is the result of multiple pulses of lots of elements getting off the bus repeatedly. Well, that's an example of it recrystallizes again and again and again. And so as a result, you end up with really large crystal size. And because of that, when you break things down and when you're milling it and processing it, which I'll admit, not my specialty, but when you're in that process, you end up with really high recovery rates because you're able to break things down easier. Whether or not how the gold factors in or how the copper factors in will be another portion of the story that we're going to develop over time. But one of the cool things is that by looking at the system as a whole, we can discover which is the most important portion of that system, or even systems, right? This is a big project. And that's sort of the pieces. And one of the cool things that we're able to do right now is because the focus on the drilling has been so heavily gold focused and shallow. 250 meters, shallow. But because all the core was preserved, one of the things that we're going to go do is we're going to go re-log all of that existing core. And the purpose in doing that is by re-logging, we can go and look at the features that were ignored because they weren't gold related or weren't seen as important. But like, for instance, you were talking about juicy steaks. One of the cool things that we can do in carbonate replacement deposit exploration is we can look at this feature called fugitive calcite. So we were talking earlier about this being a replacement reaction, right? So when your metals hop off the bus because of the reaction, carbonates get back on the bus, and it comes along with hitchhikers, particularly lead and manganese. And one of the cool factors there is because of those hitchhikers, you can take a cheap ultraviolet light and you can hit it. You can hit the calcite that you see with the UV light. And if it's related to a replacement reaction downstream, upstream, closer to source from where you're at currently, it will glow hot pink. And when you're in a really strong system that has seen multiple pulses of mineralization, because that's what you're looking for. You're looking for this thing to overprint again and again and again and again. That's how they get big. That's how they get high grade. So the more of that you see, the juicier the system that you're dealing with. And when it's really good, it looks like barbecue coals for like a barbecue. So in that case, this does fit back to your steak analogy, where the really good mineralization, you can see it's there and it's juicy and it's ready to go because you've properly marinated it. And now, boom, you're ready to go and eat up a good time.
I like your analogy better. I just have to figure out how to make it about food and barbecue. But I'll have to work on that. I like how you're more excited about these things than your dad, which is kind of cool. But I'm also glad you're mentioning these historic holes because I want to get sort of a better background on them since it's so 23 core holes were drilled, 133 RC holes, shallow as you mentioned back in the day. Agnico hit gold in 9 out of the 12 holes they drilled, yet the project didn't move forward at all. How come?
So a couple of things. I mean, the previous drill holes that we will be putting out as part of an independent 43101 compliant technical report because they haven't been part of the public domain. So we wanted to make sure that we did our due diligence before releasing them and making sure that if we come to the market with information, we can stand by that information. We think, being transparent and also, doing good geology and proper work is important. So that's part of why we're doing it. It also gives us ownership of all the data. So that's what we're doing there. The Agnico, essentially what happened there is the program was not priority. It ran into COVID-related issues because the program started 2018. And in terms of mapping, and then they were getting ready to drill and COVID happened and a whole bunch of stuff happened there. And then more importantly, with the deal with Yamana and Malartic and putting all that together, they dropped quite a few earlier stage programs. And so this was one of the projects where we get to benefit from that. I mean, in a lot of ways, what Griffin represents is this is the time in the market where the truly great projects pop loose. And we were lucky that about 15 years ago, the underlying vendors on this project had my dad come out to look at it from a CRD perspective. Hey, we've got all this super high grade silver, lead, zinc on surface. What's going on here? How does this fit into the overall system? How can we use this to potentially understand the gold? And, he left that property saying, if you guys are ever, if it ever needs a new home, I want it. Because it's significant, and especially in consideration with what's going on, north of us in Emigrant Rain or Railroad, or south of us in Eureka. One of the cool things that's coming together in Nevada is we're seeing these combinations showing up, which is exciting because you look at Nevada and you see these big Carlin deposits and you go, that doesn't just happen. You get these big structural events, you have big porphyry systems, and the age difference between some of these porphyry systems that CRDs tend to be related to and the Carlin gold mineralization, like you can have an age difference of 50 to 60 million years, right? And so, but those same structures, that same essentially weakness or pathways in the crust can be used by multiple events. And when you get them stacked on top of each other, that's where truly magical things can happen in terms of, or marvelous things can happen in terms of the economics. Because one of the cool things about Eureka historically is that back in the day, they were mining high-grade silver, lead, zinc with a gold kicker. And now we're looking back on these and, maybe it's just youthful excitement about this style of deposit, but I think CRDs can really be sort of the next great deposit type. Well, actually, if you ask in Mexico, they are the great deposit type. Grupo Mexico is like the fourth largest mining company in the world, and most of their big deposits are CRDs. And so, you look at big CRDs, you look at these big systems, and you start pulling them apart as full systems, especially because you know, they're small footprint, they're good metallurgy, and you get a lot of the things that you care about all in the same ore. You get your silver, you get your lead, you get your zinc. Sometimes you get some critical metals that come along with it, and if you're in the right territory, you're also attached to a porphyry, so you get the potential for the copper and gold. And when you're looking at these full systems and you're exploring them on that true district scale, you're looking at them at the whole continuum rather than saying it's just a, chimney manto, or it's just a skarn, or it's just a porphyry. And instead of looking at the thing in its totality, it also means that you're looking at the potential in its totality. So, at some point, we will look towards identifying the source of Griffin. And considering the fact that we have surface samples that come back 5 to over 11% copper, the thing that we're going to look for, because it's an important exploration vector, could also have the blue sky potential of being economically important as well. And so that's one of the benefits that you get from looking at the full system, is that you don't blind yourself to the true potential of a deposit, or you even look at some of the deposits in Mexico, like La Colorada, where they've got, chimney manto all the way down to skarn mineralization, and some of these things that are starting to develop. Or you look at one of the greatest CRD systems in the world, which is Bingham Canyon, and it started off as these chimney manto systems, and then they found the skarn, and now you got the huge porphyry component. And that's one of the exciting things about not boxing yourself in when you're exploring, and thinking about the kind of thing that's actually the type of deposit that can create multi-generational wealth. The kind of deposit that can have that long lifespan and really move the dial. And that's our focus, and that's why we're excited about Griffin, because we think it's one of these.
You also make sort of you mentioned that there's similarities between Griffin and Ruby Hill.
Yes.
Not a lowly placed bar there, especially given how early stage Griffin is. Where is that comparison coming from specifically?
That specific comparison is coming from what you can see at surface. And also, one of the things at Ruby Hill is, historically it's a CRD district, in the same way that you see at Griffin. So you have the historic production of the oxidized silver, lead, zinc that was up in the above oxidation level. And so we see small scale production at Griffin back in, I think it was the 1890s. I'll have to check on that date to be specific. I should have this off the top of my head. There was a fire in the Griffin and the Union Hill district, which sort of cut them back compared to Eureka. But Eureka's been in production for years as a CRD, and then they found, I think it was first Windfall and then Archimedes were the two big Carlin type gold systems that were in production. And in Nevada, you have an event where the discovery of Carlin and the ability to do bulk tonnage mining, in large part because of the change in gold price. One of the things that's also happened is people forgot that Nevada's the silver state, and it's the silver state in large part because, yes, you've got Tonopah and Comstock, but you also have the CRDs. And so you've got Eureka, you've got the Union District where Griffin is, you have the Railroad District, you have the Emigrant Rain District. And one of the cool things that's happening right now is there's a refocus back on what the potential is, what potential relationships there are between the CRDs and the Carlin systems. And one of the things that we really like about the relationship between and the comparables between I-80s, Ruby Hill and the Eureka District, and what we've got going on up north is, that technical team has been doing a brilliant job at focusing on the geology and following the whole system and, following the big structures, looking at the porphyries. And we see a lot of the similarities in what we're doing and what we're going to be exploring for up in Griffin. So it's historical research. It's looking at the comparables. My dad's been to both a number of times. Eureka's a CRD, so of course he's been there. He loves that district. I think he went collecting for the first time in Eureka as a mineral collector in like the 80s, when he was working for maybe the late 70s. So, he's familiar with that, and we see a lot of surface expression exposures that are similar in both as well. And so, we see the potential of something like that at Griffin as well.
The Eureka and Elko counties are not shy from exploration at all, as you pointed out. So I don't assume there would be too many permitting challenges for you, but how far up that process are you now?
So one of the cool things that came with, we got so lucky with this project, in large part because the underlying vendors have been taking good care of it. The NOIs are there and preserved. So, we've got multiple areas. We've got drill pads. There's a ring road that already exists there, access to some of the areas we already want to go to, as well as a couple of patented claims as well, which provides us some extra mobility. And so one of the things that we'll be doing is, with the relogging of the core, is identifying what our prime targets are. We've got a whole series of them right now, and the real question is, who deserves to be, I know this is weird to anthropomorphize drill targets, but I consider it a little competition between the drill targets on who deserves to be number one. Where do we take the first shot? What is the information that we need that we don't have in the existing drill core? And what of the drill core we have tells us, hey, you're really close to something, or, you're seeing features that say, if it had just gone a little bit longer. So these are the pieces that we're taking into consideration. But we're also not the kind of company that's just going to go and twin hole something. We have that core. We'll be putting it out with the 43101. So we're not just going to shoot next to something. We're looking to expand the understanding of this district. And the crazy thing to me, and I'll blame growing up McGaw, I have a deep love for CRD mineralization. There are some crazy carbonate replacement deposit targets that are at surface, absolutely wild, running like 500 grand silver with like multiple over teen percentages lead zinc. And that's a target that hasn't been drilled yet, in large part because the gold numbers aren't as crazy as they are elsewhere. And one of the fun facts that we're sort of pulling apart as well is we're dealing with probably multiple gold mineralization stages. Because gold can also be sort of a trace element on CRDs. They'll form these like gold silica caps. And then you also have the true Carlin type mineralization that's been identified at Griffin as well. So we had the arsenical rims, the fuzzy arsenical rims on the pyrite that's carrying the gold. So, you put those pieces together and you're looking at a system that is long-lived and big, and those are sort of the pieces that we've got there.
How long is it going to take you to log that core and come out with the 43101 report?
So the 43101 is already underway by an independent professional or certified professional geologist who's well respected in the field. And so, he's already been working on that. And then we will be logging the core this spring. So it will be the team. So Renee will come up from Mexico. My dad will be there. We'll probably get some Carlin guys to come in as well. I'm actually, one of the things I'm working on right now is making sure that I have everyone's schedules and flights and all of that organized. And we will log the core for probably about 10 days. We will go through the over 12,000 meters, and we will log all of that as if it hasn't been logged before. And The idea there is we'll be focusing on primary observations and really paying attention to make sure that we're following what the geology is telling us, and using, you know, drilling costs money. So when you have the ability to tap into drilling without having to pay the drilling dollars, that's something that you should do and take seriously. And so that's what we're going to do.
So drill targets by the end of Q2, does that sound reasonable?
Yeah.
Okay. When does drilling start then based on those targets?
So drilling will start this summer. We have one target that we're pretty certain we're going to start with. But we'll see if someone else says that they're a better hit potential, and more likely. And that will be based on, internally we'll figure out our drill targets probably during the logging process.
Okay.
And then really refine it from there.
What is hit potential? As in, what do you define as success in this target? You're hitting the scar, you're hitting some of the trace elements. What would you consider success?
Well, I think for us, success is going to be whether or not we've identified a major structure. And, one of the things, because you mentioned this earlier, CRDs are not just skarns, they're also chimney mantos. So those are that more distal suburb portion. One of the things that we're going to be looking at is figuring out where we step from oxidized to unoxidized, see if we can figure out oxidation level. We'll be focused on those big structures. We'll be focusing on the CRD style mineralization in early steps, mostly because it's more dramatic. And the reason for going for more dramatic, flamboyant looking mineralization is that it's easier to identify main structures that way. Obviously, we'll also pay attention to the gold mineralization. If we hit that, we're not going to complain. We're not silly, but that's one of the reasons why we've got that Reyna gold combo as well. And so I guess success for us will be defined as proof of concept or indication that we're getting close to concept. I wouldn't want to oversell the potential there in terms of early hits and programs, but we think we have a high chance of hitting something interesting.
Right. Okay. Well, so a lot of the time this year is going to go into Griffin. What percentage of the money that you've now raised after this cap raise will go into Griffin?
I would say probably, so we'll be doing at least 2,500 meters. We're waiting on quotes coming back now. We had some preliminary quotes going into the raise that were, in the 300s per meter all in.
So you're not going too deep. I mean, you're not going much deeper than historic drilling on the first drill.
Oh no, we will go deeper.
Okay. How much? But it's not it's not 1,000-meter hole. I don't assume for $300.
No, we'll be going. Well, I can't say that for certain. Probably not. But one of the things when you do a deep hole, like for instance, like our first hole at Medicine Springs, is a lot of times what you're doing there is you're not doing a vertical hole. You're trying to cross as many structures as you can. So you can think of it more of as a long hole. And, I can't rule that out because if we have say it turns out as we do re-logging that we've got 4 or 5 big structures that all appear to be mineralized, we might decide to do a single long hole that crosses multiple of those rather than doing, 3 short holes that are going to be, hitting mineralization too high up. And so we won't be getting the information that we need. A longer hole might do that. I don't know because we haven't put those targets together in that kind of definition in terms of depth. But no one has ever accused my father of short holes. Or if they have, I'd like to meet them.
Right. Okay. What happens to the rest of the money? What else is the focus?
So one of the things that we're keeping an eye on is what's happening with the market, right? We want to avoid taking on too much dilution. We do have 2 really prime targets at Medicine Springs. We're going to be working on refining those over the summer because you always want to make sure that the arrows that you have in your quiver are sharp and they're ready to go. So should the market turn, should we do well at Griffin, we're able to deploy those as well. Or maybe put that mineralization, that money towards drilling at Griffin. those are sort of the big factors. We'll also continue to work in terms of developing targets at Gigi and Botapilas and trying to put those into the most, make those
Right.
as refined as possible. Because, doing that is what allows you to make discoveries. That reiterative process, that really the deep dive and making sure that the capital that was spent on drilling and the work that's been done gets fully utilized. We like to go for the sharpshooter technique rather than the machine gun technique.
Sure. Okay. But essentially with the drill target at Griffin, that's 2,500 meters, $750,000. You have a whole lot more than that now after this capital raise. How much are you budgeting, by the way, for G&A this year? Around that 200 grand a month range, or do you think higher or lower?
200 grand a month.
Yeah.
So that would have been, so you were saying that was in the ratio, let me see if I remember this correctly. So you were looking at the first 9 months of 2023.
Yeah.
That was before, that included 3 months of drilling at Botapilas and the beginning of drilling at Medicine, but didn't include the final portion of drilling at Medicine. So I think that ratio is more on the drilling side than on the G&A. But no, the G&A cost will be less this year.
Okay. Do you have any? You don't have the budget in front of you, or like how do you?
I do not have the budget in front of me, in part because we are defining the budget right now.
Sure. Okay. But the point was, it's still a lot more money to be spent elsewhere, or potentially do more drilling at Griffin. But as you said, you watch the market, be prudent with that capital. There's one thing that I've been also wondering, looking at specifically this deal too, because it's a JV between you and Reyna Gold. There often is a discussion of there being too many listed issuers with too many G&As, and again, Reyna Gold has its own G&A, and at the same time, gold and silver often occur together. You say there could be gold in the system too, in the ground, that is. So wouldn't it make sense for you to have, say, one G&A and sort of combine companies and go after everything that you're doing together?
It's something that's being taken into consideration. It's part of why, like, one of the things we're looking at relative to the budget, is what we can do on that aspect. The project itself is being run by Reyna Silver, so we are the operators, explorers on it, although we are tapping into some of the expertise on Reyna Gold in terms of some of their advisors who have depth of knowledge in the Carlin mineralization. But one of the things that we always want to keep in mind is staying nimble and being ready for a pivot, especially with this market. That is one of the considerations we're taking into, that's on the plane right
now. Okay, and the spend, the 2,500 meters that you're doing, is that a 50-50 spend between you?
Yes.
And okay, good. Well, essentially, you have plenty of capital. I don't necessarily see a reason for capital raise over the next 12 months. Is that the case? And even
that's the goal.
Okay, that's the goal.
Right. So our goal is to be able to focus on drilling. I mean, one of the components here, and that's why I say minimum of 2,500. One of the components is, should we hit mineralization of significance at Griffin, we may make the decision that we want to drill more at Griffin. Right. We may make the decision that we see that the market is buoying, and in which case, going after those 2 drill targets at Medicine Springs, removing the rig over there and doing that is something to take into consideration. But as of right now, our focus, and to make sure that financial health of the company is properly maintained, and that we have the full team focusing on Griffin, I'll be going out at site and making sure that we've got camp all set up and everything's put together. And, this is really a team effort. That's why we'll be focusing, summertime, we'll definitely be on Griffin.
Okay, sure. When do you go to Botapilas this year?
So, I haven't been to Botapilas yet, fortunately. But the team right now is we're still working on understanding this gold mineralization there as well. So one of the cool things that happened at Botopilas is when we stepped out of the historic center of gravity where 300 million ounces of mostly native silver was found. When we stepped out of there over a kilometer, we started finding gold. And not just a little bit of gold, but especially once we discovered mineable widths and grades of gold. So over 3.5 meters of over 8 grams gold. Okay, that requires a rethink of the whole district. And so that instigated our year-long systematic sampling structural geophysics program that yielded a couple of anomalous sort of stacked anomalies. So when your structure has an anomaly, your sampling has an anomaly, your geophysics has an anomaly, that looks like a particularly interesting target. And that's where we intersected that 30-meter section of silver mineralization that starts 3 meters from surface that included 9 meters of over 600 gram silver. That style of mineralization is a little bit different than what we've seen before. So one of the things that we're working on is, okay, how do we pull that piece apart, understand where it fits into the framework, and see how we can use that to get out of the historic district and find the next big portion. Because we're not interested in finding the little pieces that were left behind. The old timers are hungrier and less risk averse than we will ever be. But with modern understanding and the ability to sort of get a chance to look at what's undercover, and especially because this thing showed up so close to surface. Okay, what does this mean for the overall district? That little, as you mentioned, the narrow intercept that we had, the 0.2 meters over 6,400 grams silver. One of the exciting things about that is it's a native silver vein in the calcite, but it's broken up by what's called a breccia, right? And one of the cool things is that the clast, or the little fragments that are in that breccia, are part of the native silver vein. So they're the native silver in calcite, but they've obviously been through a exciting and highly energetic event, and they're rounded and they've been tossed around, and you can see that in the core. And the matrix, or the cement that's holding it all together, is a silver mineral called acanthite. And that's one of the features that tells you you're getting really close to one of the famous ore shoots of Botopilas. So these are these features that, you'd start off with these kite veins, like what we've intersected before, these super duper high grade native silver and calcite veins. And then over the course of 3 to 5 meters, they balloon out. And one of the features that you see as they start to balloon out to be their full width, 3 to 5 meters with a 0.5 meter to 2 meter native silver core. As you go into that blowout, one of the features that you see is one of these acanthite breccias. And so what hitting that in hole 57 told us is, okay, you're getting close to these things. Now the question becomes, which direction do you go? How do we figure out how far to go and how to step out? And especially because these ore shoots, they're the kind of things that geologists dream of. The ore shoots themselves, the core of the ore shoot where most of the grade was, would run up to 2% silver. We don't normally talk about silver in percentages, but that's 20,000 grams as like the higher end average of these things. And that feature would be 0.5 meter to 2 meters, 30 to 80 meters on level, and then would go for hundreds of meters down. And so that's what we're looking for at Botopilas, and that's why we're particularly excited about what we found at hole 57, because that hole was a test of one of these stacked anomalies. We decided to do it. There were some that were undercover, and then there was this thing. And so we decided to test it where it was between two of the bigger veins. Okay, let's see whether or not these stacks of anomalies result in anything. Now we've hit a vein. The idea then becomes, how do we vector our way into one of these ore shoots? And then when we understand how that works, how can we then take that idea, that, I don't want to say model, but that strategy to find them, and how can we take it to a place that's undercover and potentially significantly expand what Botopilas is? And so that's our premise of, once again, going after these true district scale, taking that ore systems approach, looking at the full system. And now we also have this gold component that's led us to this. And as we better understand silver, would that then allow us to better understand the gold? Because we also have this area there called Banda Este that we're doing some significant work on, where we get gold and silver together, at least 2 different gold mineralizing vents. So that kind of goes back and this is my cat. She's really insistent on being a part of this. And when you have these big systems, when you have the structures that carry mineralization, they can do it multiple times. So our understanding is the silver and gold aren't from the same mineralizing event, but they're using the same structures. And so, can you use one to better understand the other? Is sort of the goal there.
Mm.
And so that's what we're doing. Well, we're not drilling.
I'm listening to this and I'm thinking, okay, high grade, gets a lot of people excited, but looking at it historically too, some of the main challenges for production in that district were grade variability and width variability, and those veins sort of running away from the people trying to produce from them. How do you deal with that during exploration? And if it keeps occurring, how attractive is it as a production district to a larger company?
Well, I mean, the thing that I would say relative to that is there's a couple of different aspects there. So one of the components was they ran what's called a stope and hope operation. So they would keep, historically you would keep multiple veins in your heading, and you would chase them and wait for them to blow out. There was not remember, this is like at latest like 1910. So you're talking pre-plate tectonics. You're talking a lot of the structural and accommodation zones, and not to get too far into the weeds, but essentially what causes those openings was not understood. And so one of the ideas that we're looking at with exploration is if we can better understand what causes one of these ore chutes to open up, to create that feature that's allowing that much silver. I mean, that's before you get into the question of how you get that much native silver. Silver's a gregarious metal. It doesn't normally want to hang around by itself, and especially doesn't normally hang around by itself at that scale. So what I guess I would say is part of our exploration idea is let's better understand what's causing these openings, what's causing these blowouts, and that's one of the things that we're working on right now. The other component there is we don't fully understand how big this system is, right? And that's why we're there, because, historically, almost every feature that's been found, all the ore chutes, they cropped out on surface. One of the big questions at Botopelis has always been, what happens if one of these things doesn't crop out on surface? What does that mean in terms of the potential for what's still there? And part of why we were so excited by hole 58 is just 3 meters from surface, you have 30 meters of silver mineralization. Hole 57, that's also undercover. And there's an example of like, okay, there's potentially a whole nother series of these, these blowouts in this area. How can we take our understanding of the historic veins, apply it to an area where mineralization hasn't been found before, and then take it to this new area? Because if we can fully understand this system, you're talking about a deposit where the diluted grade was over 1,500 grams per ton silver. And yes, it makes these blowouts. But if you can understand where those blowouts are, with these near vertical chutes, you're talking about stupidly high recovery grade, very high grade mineralization with small footprint. And that's one of the reasons why, we've looked at Botopelis and it fits in alongside our other bigger CRD projects.
I'm almost as confused as your cat right now, which is been trying to catch something in the background for a while now. But you're what is happening in Mexico this year? Are you going to any of the other projects and doing something else there, or is that going to be a focus?
So we're focusing on Nevada for the summer, in part because Nevada has this thing called snow, which means that it's really hard to drill there, or it's more expensive to drill there during the winter, which is one of the reasons why we're focusing on the Nevada assets for the summer. And that also allows us to keep an eye on what's going on with the election. Wait for June to come around and have a better idea of, okay, which way are things going, which should then, allow us to make more pertinent decisions about how we're going to approach Mexico. But, one of the things about Mexico is if you're looking for silver, you go to Mexico, right? I mean, 9 of the 15 largest silver districts in the world, the ones that have produced over 1 billion ounces of silver, those are all in Mexico. It's the perfect storm of geologic events to create these systems. The second best address, Nevada's pretty high up there in terms of a place to go looking for silver. So that's why, we've got the 4 assets. A stool is more stable with 4 legs than with 2. But the other reason is that we can work on those targets and doing the good geologic work on the 2 projects when we're not drilling, and we can drill at our Mexican projects when it'd be way more expensive in Nevada to drill.
Right. But you're not drilling right now. What I'm reminded of when I think about that is that last time I saw you must have been I saw you during PDAC, but before that it was during the German Gold Show. And someone asked you there why, given the share price performance was already negative for that year, why there wasn't too much open market buying. And the share price has dropped about 50% since then. You're now cashed up. You have the plan to go and drill, but you're not blacked out right now. You and the other insiders, I don't assume, are blacked out. So do you think there's going to be more insider buying in the open market?
Well, I just participated in the financing. Most of the board and management participated in the financing. When it is a time that's proper, I mean, I'm a little bit on the younger side, so I can't speak to everyone else in terms of how they're going to buy. But, Jorge, the CEO, owns over, let's see what the new numbers, like over 8% of Reyna Silver. So, we've got a strong support among our board and management. He spent a considerable portion of this last year in blackout with drill results and plans and the acquisition and Griffin and such like that. But if the share price remains where it is, I will keep buying when I'm capable.
Right.
I don't show up on Insider.
Okay, right. Sure, that makes sense.
Consultant.
Good. Well, I think you have to run here. We've been through a lot. What am I forgetting to ask you here? What did you come here hoping to talk about that I'm failing to bring up?
I think we've covered a lot. I mean, obviously, we're excited about our projects. We're looking forward to what we're going to be doing there this summer, whether it's Griffin or working on honing those targets at our other assets. Don't forget about Gigi. I mean, that thing is, you've got a suburb that's produced 500 million ounces of silver, and the downtown area and bus terminal have yet to be found. So we're working on that one as well. We're doing AI optimized geophysics there. Seeing if we can really hone in some targets, particularly because most of those are undercover. It's why it hasn't been found yet. But I would say to your viewers, keep an eye on us. We post regularly on Instagram and LinkedIn and social media and putting those pieces out and trying to keep you all part of the story so you can see what we're doing, and always happy to answer questions and comments and jokes and see what we can do. And hopefully 2024 is a great year for all of us, and it's looking pretty bright for Reyna Silver.
All right, well, thank you, Lauren. I don't want to keep you all day. I don't want to make Dr. Peter McGatt mad at me. So I'll let you go, but thank you for the overview. I'm going to move over to talking to Michael Rowley. He's the president and CEO of Stillwater Critical Minerals, a battery and precious metals exploration company with assets in Montana and Canada. Companies listed on the TSX Ventures Exchange under the ticker symbol PGE, creatively enough, where an average of about 85,000 shares trade each day, with a 52-week high of 23 cents and a 52-week low of 13 cents. With a market cap of $29 million and 200 million shares outstanding, today this is a 14-cent stock. There are 18 million options at an average price of 25 cents and 43 million warrants at 36 cents, resulting in 260 million fully diluted shares. Insiders own 20% of the company. Glencore owns a hair under 10%, and institutional investors own 25%, leaving 27% in the hands of high net worth individuals and 18% in the hands of retail investors. As of the last interim financial statement, which is dated December 31, the company had a little less than $2 million in current assets, a large chunk of which, about $600,000, in the form of heritage mining shares. That's going to make sense in a second. And another $650,000 was due from related parties, $200,000 in prepaid expenses, and about $350,000 in actual cash. Those current assets sat on the balance sheet against about $280,000 in current liabilities, so account payables and stuff like that. And according to the same financial statement, Stillwater spent on average about $135,000 per month on general and administrative expenses, whereas over that same 9-month period, on average, about $335,000 was spent per month on exploration and evaluation, with about a third, so roughly $110,000, going into the ground directly, so drilling, leaving the G&A to money in the ground ratio at a little over 1:1 for those 9 months of 2023. Please do head over to the company's official website, though, and setterplus.ca to review the most up-to-date financials by the time you're watching or listening to this, because the financial situation will have changed. This is an active company, and again, it costs money to run a company. Boring stuff aside, though, there are multiple projects in Stillwater's portfolio, but the flagship asset here is called Stillwater West. Again, points for being creative here. This is a brownfields project in south-central Montana, in the U.S., that is. And it is a PGE nickel copper target. Sounds like a lot of metals in here, but it wouldn't be the first time something like this was found in the region, because Siboney-Stillwater's 14 million ounce past producing platinum and palladium mine is in this region as well. Again, this is not a new project, and it's a brownfield. And the updated MRE from last year that looked at 5 deposits basically in a 9-kilometer strip, if you will, shows an inferred mineral resource of 1.6 billion pounds of nickel. That is indeed with a B, copper and cobalt, and 3.8 million ounces of palladium, platinum, rhodium, and gold in a constrained model totaling 255 million tons at an average grade of 0.4% nickel equivalent. So as a split, we're looking at about half of this resource, about 48% being nickel, 25% is platinum and palladium with a large palladium bias, and 10% cobalt, 9% copper, with a 3% exposure to gold and 5.5% exposure to rhodium. It's hard to make equivalents here, though, because of the presence of that many minerals. So that's something I hope Michael and I can discuss later on. But this is also not the only project that the company has. As I mentioned, there are multiple more. There's one in the Yukon that's also a PGE nickel copper. It's called Kluane, and it hosts 3 different properties on the same ultramafic belt that shares its name with the project. To the north from that, so that would be back in the U.S., actually, a concept that we Europeans never understood, but it's Alaska, where we find the Duke Island Copper Nickel PGE project. This is a 100% owned, and historic exploration shows potential here, although Stillwater is still to drill it themselves. So hopefully a brief update on it later on as well. And then to the south from that project, all the way in southeast BC, is where the Yankee Dundee Gold and Silver project is. This is no longer Stillwater's project, as it was sold to Armex Mining in early 2013, so over 10 years ago. And that could potentially result in up to $4 million in cash and royalty payments, depending on mine performance, the market, and a bunch of other factors. I haven't heard much about this project, so I hope I'll get a quick update on it later as well. There's another gold project in Ontario this time that Stillwater does not operate, as this one is optioned to Heritage Mining, and they are working to get into earning up basically a 90% ownership of the project. This is also where the shareholding I told you about earlier comes in from Heritage Mining. So with all this, I know that I've been talking a lot. So suffice it to say, many different projects across North America and different types of deposits too, which is actually where I want to pick it up from Michael, because I would like to better understand the whole strategy behind this company, and the overall plan for monetization of these assets. Like, how do I make money off Stillwater, basically?
Well, thank you, Antonio, and I'm glad to be here. Yeah, we basically we like to build district scale land positions in good districts. Stillwater West was the most recent addition, 2017, and quickly became the flagship based on the district, the database, the potential, the bushveld parallels that are there. With that, the other projects basically became non-core assets. And you commented on the deal with Heritage for the Black Lake Drayton package. That's the kind of thing we're looking for to add value for these assets. So that is a district scale gold land position beside Treasury Metals. They have a really good earn-in in place with us. I think it's a win for both parties. And as of today, we still hold 100% of that project. They are on their way to earning that first threshold, 51%. The Kluane project you mentioned, very large land position in the Yukon, and ultimately we may look for a similar deal on that. Duke Island, less of a focus for us. We do get interest on it, and in fact, interest now on hydrogen production and carbon sequestration, and we'll see where those lead. Yankee Dundee was our listing asset in 2007, and we can get into that for an update in a little bit, but suffice it to say, as shown in our financials, we maintain a back-in right in the event of non-performance by the buyers. And that's probably all I should say about this at this point. As you can see, we've not really received much towards that $4 million value that you mentioned. Stillwater west of Montana, very much the focus. This is the largest nickel resource in an active U.S. mining district, full stop.
Right.
Yeah.
Siboney Stillwater is very close to you there, though. How did they miss this? I mean, if it's that good, why do you have it?
Well, they might have gone for it, right? They announced their deal to buy the Stillwater mines, the iconic Stillwater mines, right as we were making the acquisition for the property. So $2.2 billion US purchase by a South African miner of the crown jewel of North American PGE production. We actually rushed to stake the open ground there, recognizing that by the time they complete the deal later that year, they may well be onto this. Our ground was held by Stillwater previously and dropped under duress when palladium prices were low. Juniors came in and did some really good work, thinking particularly Beartooth Platinum, other companies. And in fact, they gave us a significant amount of our database, but they went bankrupt in 2013. And a quick thinking local grabbed some claims and bought the data from the juniors and basically shopped it to us about 4 years later.
Okay. So they might have gone for it. That's where you're going to leave me with a tease.
Well, they're South African and they understand the giant South African mine models that we're bringing to the district, right? That's what had been overlooked in the past. Beartooth's drill results even suggested that, I mean, they were starting to make the connection to Bushveld and Platte Reef being the lower part of the Bushveld complex below the high-grade reefs. That's exactly where we are in Montana. That's what we staked, and that's why this is so compelling. Thanks to the vagaries of the mining law of 1872, which it still is in the US, bigger companies didn't know this was open for staking. Perhaps Siboney did as part of their due diligence, no question. But we grabbed it, and shortly thereafter, much larger companies were asking me how we were able to do that.
Well, I was looking at your presentation, so looking at some of the rocks that you've put on there, that shows me that the deposits are basically, as far as I understand it, they're not set in the same stones as Siboney. So yours is not in the same stones. Like you mostly have periodotite, pyroxenite, and chromite, which are very difficult for me to pronounce, but they are known for complex mineralogy and chromite even for toxicity. So could that be a thing? Like, have you looked at any at doing any metallurgical work on this, and what kind of recoveries do you think you can expect?
Well, the high level answer is that these are actually the largest nickel mines in South Africa, right? The exact parallel to this. So it's all manageable. It's actually not complex metallurgy in terms of it just being nickel and copper sulfide. And that's what we would target to mine, simply. We have not put a value in the chrome. We do inventory it, but we've not assumed its value in our projections to date. Amex did very good work on metallurgy in the early 70s, especially on what they were calling Camp Zone. Now we call it our CZ deposit. It's one of the 5 you mentioned. They did very good metallurgy, 1972-73 timeframe, single stage flotation, and they showed good recovery of nickel and copper, and actually all PGEs, including rhodium, into what appeared to be a saleable nickel con. They did good work there and across the property, late 60s, early 70s. Any of my maps, you see 355 series holes, that's their work. They ultimately dropped the project in the mid 70s, presumably because of nickel prices and the fact that they were seeing sort of 0.5% nickel over long lengths. We have since brought their data into a broader model, and what was learned in the Platte Reef, South Africa, starting in 93 with the advent of Anglo-American's Mogalakwena mine, next to Ivanhoe's Platte Reef mine. We've applied those models and what lessons were learned there, and we've expanded this to the 5 deposits that you see. Most recently, we've added the in structures, these high-grade, late-phase magmatic pulses. And that's actually on top of the Platte Reef model. That's a whole separate thing we can get into in the interview. Basically, we're the first to take that 31 kilometers of strike and really, sorry, it's 32 kilometers of strike, and really build it out and apply these modern models to it.
But essentially the nickel, which is about half of your entire resource, that's hosted in sulfides, right?
Yeah.
Do you know what kind of sulfides?
Yeah, it's largely pentlandite.
Okay.
Yeah, in fact, it's often nice, large-grained pentlandite. Chalcopyrite with that. There is presence of pyrrhotite and iron sulfides as well. That largely is the sulfide suite that we see.
Okay. Are you going to be doing any met work anytime soon?
Absolutely. Yeah, we had actually hoped to last year, but due to budgets, we focused elsewhere. You will see us begin to wrap some PEA level thinking around this. Just coming back from PDAC last week in Toronto, that's what the market needs to see. This project is ready for it. It's now big enough to start wrapping a PEA around it. We will continue to drill and grow in parallel. As you mentioned, we've got 5 deposits across 9 kilometers. They clearly want to connect, and there's clearly step out potential. But we will definitely begin to do metallurgy and PEA level thinking around it as well.
Right. I do want to ask you when you're targeting PEA and what else you're doing. But just before that, why I mentioned the chromine here that the deposit is set in is because I'm thinking about tailings and waste management too, because again, the different host rocks may result in different tailings from a geochemical perspective type of thing. Chromite, again, could be toxic, could potentially present challenges. So have you done any tailing studies, or had they done any tailing studies, and have you looked at anything like that?
No, we have not, and that is sort of down to the kind of mine planning that would come next. Generally, they're distinct, and I would expect that we can manage that. We get sulfide, we get disseminated massive net textured sulfide. We also get sometimes real chrome seams like they used to mine historically at site, sometimes disseminated chrome. Generally, a mine would focus on the more desirable rock, and that's what would come next for us.
Right.
What we see, and you ran down the high-level summary of our resources, we see good optionality on mine method. We've got typically even hundreds of meters that are bulk mineable. And within that, perhaps 100, 150 meters that are sort of mid-grade. And then even a high-grade core within that. There's a 12 million ton deposit within that that's over 1% nickel equivalent. It makes a nice high-grade piece. So we have some work to do in terms of what we're going to focus on and what the market wants to see. But based on conversations in Toronto last week, I feel really good about moving that forward.
Right. The mineralization there, by the way, good point that you're bringing up. But is it sort of like a sheet of lower grade first that could be bulk mine? Like, there's not. What I'm getting at is would there be a potential for sort of a higher grade starter pit to help you carry capex? That's
exactly what we're hoping for. So far, the stuff that is right at surface is lower grade, bulk tonnage, sometimes mid grade. In some spots, it starts with the high grade right at surface. The high grade is not deep generally. So there certainly is potential to build your access, perhaps on the hybrid, which you've seen in my figures of the west there, and then go down and chase out underground from there to the east. That's one idea we've talked about. Again, all early stage stuff.
Right. You also mentioned that the thing that your predecessors looked at was a copper concentrate. Is that right?
Nickel copper. The matrix here is
I
nickel
meant a
copper.
nickel. I don't know why I said copper. I was thinking about nickel, but copper came out. Yeah, so a nickel concentrate. But just one final product? It would just be one concentrate?
I don't know. I assume it would be two. Typically you split. But there's a question of what downstream processing you're doing here, right? And there's a lot of interest in applying hydrometallurgy here. We've had extended conversations with the Department of Defense. They really want to build a nickel supply chain in the US. We have 9 of the minerals that are listed as critical now in the US. And again, they're producing mines in the US right next door to us. It's a very good setup. Those mines are even well liked, frankly. One of the first questions for them was, which elements do you want us to focus on? And they were quite clear that nickel and even cobalt are the two. So we would proceed on that basis and engineer a mine and probably hydrometallurgical facility intended to rapidly build a U.S. supply chain for low carbon nickel.
So the government wants that, but do they want to give you money?
Yeah, if you look at the DoD grants that have happened under Defense Production Act Title III, seems to be the preferred channel. Tens of millions of dollars in matching grant funding is possible. And that would be the most applicable thing here. That is how their preferred channel to provide exploration, drilling, advancement funds.
Right. Okay. To go back to those concentrates, but that basically be 2 circuits. So like a precious metals concentrate and then a copper nickel. Yeah, a nickel copper concentrate basically.
It might even be a nickel and a copper separately. It's where the metallurgy points us.
Okay.
Yeah, we need to do that testing and arrive at that flow sheet. And again, if you're doing hydromet, if you're not smelting, pyromet versus hydromet, a number of options open up. And what we're hearing from recent meetings in Toronto at PDAC with international parties is that the Inflation Reduction Act, IRA, is driving strong interest in securing IRA-friendly nickel, cobalt, copper, and getting off Chinese supply chains, right? Which in the case of nickel is Indonesia. This is doing the work that the LME is not doing in terms of recognizing nickel supply. You know, the dirtier stuff that comes out of Indonesia versus the cleaner stuff that comes from sulfides in North America.
Right.
This is an important distinction, and the IRA seems to be working in that regard. These parties really need to change quickly to IRA-compatible nickel sources, which would be us. We're the largest nickel resource in an active U.S. mining district.
Right. Who are you meeting? Who's selling you all that? Because you say they're international parties. Who's that?
Well, this is a car maker that has a plant in the southern U.S.
Okay. Interesting.
Yeah.
I feel like I can get a little bit more out of there, but I'll let you be. That's enough. I wanted to.
It ended at a Korean reception, so you can imagine those. There's a special sidebar reception for Korean industry, and all the big Korean names were there. And this one car maker was very clear that they need IRA compatible nickel. They can't buy their mixed metal hydroxide products from China.
But where does then, if there would be any type of potential deal here, and that's a big if, the forward-looking statements and all that, but where does your independence from Glencore come in? They have the option to increase their ownership in the company to over 15%, I believe, for some $5 million or so dollars.
Yeah.
Does that scare off potential strategic partners? What are they telling you about Glencore's involvement in the story?
No, these generally aren't parties that want to build a mine. These are parties that need to know that they have metal supply, which is their concern, and metal supply within regions, which is the geopolitical aspect to it. Glencore has been an excellent partner in this and would be an excellent party to build a mine. They're also an international metal trader. So There's a bunch of ways that they work here. Sibanye, obviously, our neighbor, would have a jump on infrastructure. Their market cap is only 4 billion versus Glencore's 70 billion.
Mm-hmm.
But they have an adit that comes in from the north and is only about 2 kilometers from our biggest deposit. So,
right.
They're also well liked, and they have a good neighbor agreement in place with locals. That's actually a good precedent for the industry. So there is room for other players potentially too, and this is all early stage stuff, But the fact that there's an active mining district, 3 mines, 2 concentrators, and 1 smelter already in the district speaks volumes. And frankly, a history of U.S. government subsidies of critical mineral mining here. They subsidized chrome mining in the 40s and 50s within the Stillwater complex that we share with Sibanye.
I'm thinking mostly about who builds this and what that means for, again, just Glencore's involvement in this, because Glencore buys mines, but do they want to build big mines? That there's a difference between building and buying mines, right? And there's not many companies left that build mines, actually. So I'm thinking who comes in, but I'm also looking towards lithium, where OEMs have been coming in as financing the actual build out of the mine and helping with the build out of the mine, even though they don't build mines, obviously. So
Sure.
where does this, like, what are the potential paths to take this from here, and when do you really know more about it? Like, does it happen at a PEA level? Is it a PFS stage? Like, when do you think you know more about it?
Well, that is my job. That is our job, to de-risk this, add value, and do it smartly. We've been offered project level deals on this from day one, frankly, from half a dozen big names now. That's not the way to add value at an early stage. At some point, it's absolutely going to be the right deal to do. We were very pleased to bring Glencore in for that 9.9% equity position you mentioned. That is the next obvious step for us. We still have our hands on the steering wheel, but we have a big partner at a premium to market, and the technical committee with them has been excellent. The depth of their expertise and their guidance on what they want us to focus on, given the number of targets we have, that's all been very constructive. What comes next? That's iterative process, somewhat dependent on markets and funding. We have an enormous number of targets in a lot of ways we could grow this. We're permitted on a large area. And based on conversations in Toronto, I'm quite excited about what comes next.
When are you targeting PEA?
I would put that inside of 3 years, maybe inside of 2 years.
Okay.
And if big parties are writing big checks, we can expedite it faster than that. And that's the iterative piece. If the checks are coming on the right terms, then we can certainly expedite it.
How much money do you think you're going to need for that PEA?
In our dreams, ultimately, a $40 million US program over 3 years would be a nice benchmark. But, a PEA doesn't cost that much. We've already got, wave your arms, 10 to 20 year mine life, at a decent nickel production, 10 to 20 kilotons per year. So we're in the right ballpark. We're offering that size that the majors need to see, and frankly, the capital markets aren't functioning right now. I mean, we're not being valued where we should be, recognizing all that we've added in 3 or 4 years. But we need to keep moving, so we'll do that smartly.
But even if you were valued 50% higher than this, that 40 million bucks would be your entire market cap. Right now, it's more than your market cap, so it's pretty much the only way to go forward for you is to figure out a strategic, basically.
Yep.
Okay.
And sign good deals at the right time. The appetite that I saw in Toronto was very encouraging, because if you want to fast track production, especially of nickel, but of our other 8 commodities that are listed as critical as well, in the US, what better place to do it? It's us and Talon, really, on the nickel scene in the US. They're great guys. I enjoy their work. Had a great time hanging out with them in Toronto. They have their challenges. We're in an active mining district. we have we have a major mining literally 2 kilometers from us underground. In a district that has a history of critical minerals mining since before it was critical.
Well, you mentioned that you're sort of slowly but surely moving towards doing different stuff for the PEA this year. What specifically, what will that look like this year?
It's largely metallurgy and also beginning the sort of engineering scoping work, mine planning. You know, which deposit are you going to focus on, which grade, what mine method, these things. Typical mine planning, scoping sort of work. And the community piece as well, of course.
Okay, right. How's permitting? I mean, what kind of permits do you need to move forward from here on?
The exploration permits have been very easy to get. This is past explored ground. As I mentioned, AMAX was active there in the 60s. US Steel before that. There are even a couple of old copper adits on the ground from old timers mining high-grade copper, possibly late 1800s stuff. I mean, it's pretty easy in that regard, and it helps to have Sibanye right next door. A lot of the studies that we needed to do for our drill permits had already been completed and were already on the shelf in the Forestry Service office because of our neighbor. It's the same office as them.
Right.
So archaeology, biology, they can simply reach to the shelf and pull one down.
Okay. But so to do all the work that you're planning for 2024, you don't need anything special, basically.
No, we're permitted across all that.
Okay.
We are expanding the permit to the west, and that's a separate exercise. That happens to be a little more greenfields. We're excited by the potential we see to the west. And we are having to do some studies for that. But it's all just, it's just time and money. It's a process.
Well, that's right, because I saw that you have aspirations for more greenfields discoveries or expanding, those 5 odds of mineralization that you have to potentially more, but that costs money. And so how do you focus resources here strategically? Is the focus towards, developing this or finding more of it?
That's exactly the mine planning question, the focus question. Given relatively limited capital, what do we focus on? And that's why we're grateful to have Glencore as partners. They're pretty clear about what they would like us to focus on. Big economic nickel sulfide. That helps that conversation. We all see potential to the west. Some of that is these conduit feeder system structures that we see. And in my presentation, you'll notice we talk about these deep structures under Chrome Mountain in particular. That's all tying into these end structures that we've identified. We've now got 8 of them. Late stage magma pulses following structural conduits. And that's what these upcoming drill results largely focus on as well. We did tag some deeper EM anomalies as well. But that's the focus question. We have a number of target types. Which one do we want to focus on?
Right. Okay.
So far, we've sort of advanced 2 or 3 at once.
When do you have that answer, though?
So it's an iterative process too, isn't it?
Sure. Well, you say that having Glencore in there helps. What are they really telling you? I mean, beyond that, they want nickel. They want nickel production. I get that. They want it in the US. But it's a sensitive thing, right? I mean, how exactly do you move it forward so that shareholders get value out of it too, given how depressed the market really is? So what are they telling you about walking that thin red line, basically?
Absolutely. And that's the name of the game, to add shareholder value, despite markets doing what they're doing in the short term. So grow it smartly, And in terms of Glencore, it's economic, large nickel sulfide. They like the polymetallic values as well, perhaps more so than other parties that we've met with. So really the memo from them is focus less on potentially smaller, higher grade things and look for those bigger, especially basal series, big EM conductors. That's what they understand from Sudbury in particular, right?
Right. Okay. Well, it'll be interesting to see where it goes, sort of on a crossroad, if you will, here. So it'll be interesting to see how Stillwater West develops. What else are you doing? Are you going to the Yukon this year?
We will be doing some work in the Yukon, absolutely. Had very good meetings with First Nations in Whitehorse in November, December, January. There's a really very strong appetite there to inventory critical minerals, and on our ground and also on their adjoining Category A ground, which is interesting. Very good work together there. We'll do a smaller program up there, $100,000 or $200,000 in size. The majority of the focus very much still on Stillwater.
What's that buying? I mean, that's not a lot of money.
No, but that advances these targets towards drill status, right? And it's worth noting that in the southmost piece, you mentioned the three main blocks there. The Ellen project has some really good copper in drill results from the 1960s. And it's very timely right now for copper. So I think you'll see us advance that in particular.
Right. Where I'm getting at with these things is because I'm just thinking about news flow and whether you're going to have a stronger news flow this year than last year, because there wasn't, I mean, news flow wasn't as strong, especially second half of the year wasn't as strong. And again, it's that sort of crossroad that you're at, but at the same time, you have to, keep the market engaged, basically. So yeah, tell me about news flow.
Would news flow have helped at points last year? There were times when you put out news and you just get hit for it. So sure. It's, we put out things that are material when they have to go out. We may do more if the market is favorable, but if it's not, then just keep doing good work on the inside. News flow from us will be drill results in the very near term. We are looking to expand the resource at Stillwater West based on those drill results. We've expanded in all three categories based on those results. Progress on non-core assets, plans for Kluane, continued updates from Heritage Mining, of course, and their earn-in, Black Lake Drayton, and then maybe some news about Yankee Dundee and the back-in right as well. We'll see how that progresses. And then, of course, plans for 2024 at Stillwater West, which is the big driver here.
Where in that process do you go out and look for capital, though? Because you're also you're gonna need to cover G&A and all the rest.
Yeah, I'd hope to already be announcing something about that. I think that's near term. Had some very good conversations in Toronto with a number of parties, and I think we'll solve the capital piece here shortly. Okay.
Talking about G&A, having mentioned G&A, the $135,000 that I mentioned for G&A per month, is that what you're targeting for this year, or are you increasing, maybe cutting? How do you look at it?
No, we've already taken steps to reduce that. That's higher than I'd like, and in this market, I don't know that all those efforts are worthwhile. So we've taken steps to reduce that.
Yeah. So what are you doing when you reduce it? That's again another thing that you think about. Like, do you market? Do you not market? What's the right amount of marketing for this type of market? So yeah, what do you do? I mean, are you going to conferences, online? What are you doing?
Select conferences. That's the first piece. To be choosy about which conference. It's easy to feel that you need to be at everyone, right? And they do a good job of selling them, so you feel that you should be at everyone. But we hear from the industry, and then within the Metallic group here, all three companies share notes very effectively. We share costs on these shows together. That helps. We largely target initiatives with good metrics, with good indicators of success. So we will pay for meetings with quality potential investors. We typically don't do any more of a kind of more blanket efforts, trust me, I've got this reach and pay me this much and I'll do that. Generally, that doesn't work as well in this market. We're looking for particular, I guess you'd call them key performance indicators.
Okay.
And direct introductions.
Right. Okay. Well, what I'm thinking about at the same time is that split basically between those two things. Like, how do you keep investors not bored while also not overspending, and keep them, if a tree falls in the woods and there's nobody to hear it, did it make a sound, right? So you want to keep the crowd there, but you don't want to cut the tree.
Yeah.
And that's kind of hard to manage here. What are those people, the people that you're meeting, and that you're talking about, as you said, qualified investors? What are they asking you basically? What do they want to know most about?
Well, I'm quite encouraged, frankly, that they're taking a long view. Too many people are getting hung up on headlines, and I think they're not even reading the articles below the headline. Just read one today that said that critical minerals prices are crashing, but actually, lithium is at bottom and moving up. We're not even lithium. Nickel has been up for 6 weeks now. It's been steadily marching up. I think the worst is behind us, and it would help if people would get past that. With nickel as well, there's the geopolitical piece and the fact that the IRA is effectively subsidizing U.S. mining and U.S. sourcing, North American sourcing of these critical minerals. These things often get lost in a lot of these articles, and the people we're meeting with understand that, and I'm encouraged by that. The big miners such as Glencore, other parties I can't mention, are really on board. And even as Glencore, for example, is looking to close their laterite operation in New Caledonia, they're still investing selectively in nickel sulfide in North America, and I'm grateful for that. They're taking that long view. Other parties are as well. Funds, end-use consumers, car makers, they know they need that supply 2 and 5 years out.
Yeah, I sort of understand that it's there, but then to get people excited, other people have to have gotten excited first because people want to see the share price move, right?
But the share price isn't really going to move until the market moves. This market has been going sideways forever. We've done relatively well because we're not as far down as many others, which is frankly depressing, but it's what it is. My share price is back where it was before I added 2 of Ivanhoe's best geologists, before I brought Glencore in, and before I did 2 resources. It's absurd. There's more value there than ever. And the meetings that I did in Toronto, me and Danny both, actually, speaking of ex-Ivanhoe geologists, it reflects that because we've distinguished ourselves now from any number of companies on the farther left of the Lassonde curve. Just to have Glencore on board and to be advancing nickel supply in the U.S., we're later stage now and more mature, and the meetings reflect that, and I'm encouraged by that. I came away encouraged.
You were buying some shares last year, if I'm not mistaken. I'm trying to look at the SEDI filing here. Not a lot, but I mean, it's a continuous support basically throughout last year with smaller purchases here and there, but a couple of thousand shares each time. Are you planning on doing that this year as well, sort of to support the stock price?
Oh, I would be if I could. It's tax time here in Canada.
Okay.
I have to watch my cash right now.
Okay, fair.
I've put over 150,000 into the company in the past, I think, 18 months or so. I know that doesn't always get noticed, but that's real support. Also bought Granite Creek, my sister company, and Metallic Minerals, the other sister company here in the Metallic Group, and some Heritage Mining as well, because I like what they're doing.
Okay.
Just to give them a plug. Yeah.
What's your average cost for those shares that you've managed to buy so far?
Oh, wow. Overall, I'm probably a little higher. My average is probably a little higher than it is now.
Okay. Is that true because it's 20% insider ownership? I'm not going to be able to pull it up quickly enough to answer that question, so I'll ask you that. Is that true for other insiders? Any idea what their sort of average cost of capital would be?
I don't know what their average is. I have 5.1 million shares of Stillwater, plus options and warrants. And Greg, my chair, his numbers are similar. I think he and I are neck and neck. So right there's more than half of that figure.
Okay. Fair. Is there a royalty on Stillwater West, by the way?
Yeah, there is a 2% NSR royalty with a buy down to 1. Yeah, really industry standard stuff.
Yeah. Who owns that royalty?
Our geophysicist,
Oh,
The guy who led us to the project, Justin Madru, partner and friend, and Picket Pin Resources is his company. You'll see that in the original news release. He's a great fellow. He's the one who led us there. He did good work with Beartooth Platinum previously. That's when he was introduced to the ground. He's got over 20 years experience in the district.
Okay.
And to your point about how we finance this next, project level deals, royalties, all that becomes possible. And as we weigh, we have to dilute somewhere to raise the kind of money that we need to do to move this forward. Is it better to do it through the equity markets? That's been our choice to date. At some point, project level deals or royalty sales, offtakes, start to make sense. And we may be just at that stage now. And with the markets doing what they're doing, we're talking actively about these different options.
Well, what about the deal in DC that's over 10 years old now? Maybe we can sort of take it from the top there. Like, how does that deal even work? Because it was not necessarily clear to me from looking at the website.
Sorry, which deal is that?
Oh, the project that you sold in BC.
Oh, BC. Sorry, yes, Yankee Dundee.
Yeah,
that was our listing asset, and we sold it in 2013 to the group that you mentioned. And there are requirements on them that they have not met. That's reflected in the financial statement. And we've always maintained a back-in right on that property. It's a high-grade gold, silver, lead, zinc past-producing mine. We identified a whole extension of the mine to the west, and it's in a very active region in the Kootenays. So there's real value there. It's not our focus. It's probably a mining story. It probably needs a small high-grade miner, and we'd be glad to realize some of that value for shareholders.
Yeah, well, there's value in a lot of things out there. The question is, how do you unlock it, right? And you having your focus on Stillwater West, do you really have time and the ability really to focus on unlocking any of that value? That's what I was mostly getting at.
Yeah, no, it wouldn't be us doing it, I'm assuming. If the right funding partner was there, same is true for all these assets. If the right funding partner is there, we can certainly find the team and move it forward. I would assume, because of the reasons you cite, focus, time, money, that we would simply turn it around to a new party who could move it forward.
Right.
For shares and cash and production payments and whatever.
But that's not something you're actively pursuing right now, I don't assume.
Well, the back-end right is there, and we're looking hard at that.
Okay, fair.
Yeah,
good.
So watch this space.
Well, Michael, I've been through a lot. I'm probably forgetting a whole bunch of things too, though, looking at my notes. But what am I forgetting to ask you? What did you come here hoping to talk about, but I'm failing to bring up?
Well, it's actually kind of my fault, I think, because you started off about my neighbor and the geology of the Stillwater complex, and I went off, and you even said peridotite and the various zones that are in our deck. It's probably a good moment to just summarize what the Stillwater complex is, and the parallels we see to South Africa, and why it's interesting. It's 40 kilometers by 8 kilometers on surface. It's 2.7 billion year old rocks formed probably about 3 kilometers down, kept hot for a long time, with various pulses of magma into this magmatic mush for probably 10 million years or so. With that, our neighbor's deposit, the mighty JM Reef, was formed at the same time as everything that we're doing. We're simply in the lower stratigraphy to that, which is the parallel with the Bushveld, South Africa. Bushveld is the largest layered magmatic system in the world. Stillwater is the third largest mineralized layered system in the world. And it's the only one in the Western Hemisphere. So it's very significant. It's big, it's well mineralized. And 40 by 8 is only the surface expression. It's actually much larger than that below the state of Montana. It's just a lot of it would never be mined. Our neighbors' mines represent literally just one magmatic horizon in that whole layered sequence. Their deposit, 40 kilometers long, 1.8 meters wide by average, over 88 million ounces current reserves resources, plus the 14, 15 you mentioned in past. at ½ ounce per ton grade palladium platinum. Staggering mineral wealth. And that's just one pulse in that overall massive system. It's fundamentally a nickel copper sulfide system, the JM Reef deposit. And it speaks to the amount of metal that's in this system. They just don't report the nickel that they recover. It's insignificant next to the palladium platinum value, but they do actually make a nickel sulfate product in Columbus, Montana. The precedents here are remarkable. It's quite fun. It's been immensely rewarding to stake that entire lower Stillwater complex and proceed with those South African models.
I'm sorry, I was getting some kind of a audio. I don't know if you could hear that, but I'm trying to open up the stuff that Sibanye has on. Let's see, stuff that Sibanye has done on the metallurgy. Yeah, I'm not going to be able to pull that up quickly enough. I should look into this on my own time. But then, essentially, what counts here is that it's nickel in sulfides.
Yeah, and the JM Reef is actually nickel copper sulfides. It's just something like 0.03, 0.04% nickel. It's very low in nickel, but it is nickel sulfides, and that's actually what they're smelting and producing in Columbus, Montana, nearby.
Right.
And it's very relevant to us because it's all the same layered system. It's all the same magmatic complex put down at the same time. It should mention it's all been tipped up by Wyoming and the mountains to the south. So it's now all expresses at surface. And to your earlier point, all of our deposits start at surface. We have the option, and we've drilled as deep as 842 meters and found mineralization all the way down. The scale of mineralization here is fantastic. And wonderfully underexplored.
Very well, thank you for the overview, Michael. Again, as pointed out in the other discussions so far, and this one, it's not easy right now. Like, there's a bunch of question marks out there, which just also for people listening means you should be doing more research and being careful with these things, because as you can see, uncertainty is sort of the name of the game here. Moving on, though, last but not least for today, I'm talking to Francis McDonald, the CEO of Lift Power, a lithium exploration company with 5 assets across Canada, specifically focused on hard rock lithium discoveries. Companies listed on the TSX Ventures Exchange under the ticker symbol LIFT, so LIFT, where an average of about 45,000 shares trade each day, with a 52-week high of $7.15 and a 52-week low of $4.09. With a market cap of $180 million and 41 million shares outstanding, today this is a $4.40 stock. There are 1 million options and no warrants, resulting in just, 42 million fully diluted shares. The founders of the company still own over half of it, so 52% that is. Management and directors hold 3%, and institutional investors like Tribeca and Commodity Capital own 20%, leaving only about a quarter or 25% in the hands of retail investors. As of the last interim financial statement, which is dated August 31, the company had about $29.5 million in current assets, $17.5 million of which was actual cash, and $11 million of it is prepaid expenses. All that set on the balance sheet against about $1.5 million in account payables. According to the same financial statement, over the first 9 months of last year, Lyft spent on average about $180,000 per month on paychecks, marketing, office, and other operating expenses. Whereas over that same 9-month period, on average, $2.2 million was spent on exploration and evaluation, with the majority, so roughly $1.4 million, going into drilling and technical consultation. And that leaves the overall G&A to money in the ground ratio, if you will, at almost 1 to 8 for the first 9 months of 2023. Please do head over to the company's website as well as setterplus.ca, though, and look at the most up-to-date financials by the time you're watching this, because the financial situation will most definitely have changed since this official report has been published, as the company has been actively drilling, and, well, of course, that costs money. Boring stuff aside, though, as I mentioned at the beginning, there are 5 assets in Lyft's portfolio, but I assume the focus of discussion today will be only on a couple of them, starting with the flagship project called Yellowknife, which you'd never guess the location of this project, so I'll just tell you, but it's close to the city of Yellowknife in the Northwestern Territories. The Yellowknife project knows 13 separate lithium pegmatite systems. They are visible on the surface, and they're also observable from Well, I don't know about space. The presentation says space, but I haven't been in space. I have seen a video that sort of flies over them and you can actually see them sort of sticking out of the ground. And I wish I could explain pegmatite sort of in barbecue terms, but I don't want to lose your entire day. So first of all, you should know that this is not the type of lithium deposit where a lot of the South American lithium deposits are, where lithium is essentially evaporating out of a pond of salty water. This is lithium minerals basically in hard rocks, so like in stone, in veins form basically. And just think of pegmatite as sort of the prime cuts, if you will, the Kobe beef, the Wagyu beef of the lithium world. They've been marinated in spodumene, which is a lithium mineral, and have been sort of slow cooked by geological processes over millions of years, resulting in sort of the juiciest, most tender meats of the lithium world, if you will, which is why geologists love them. There has been some historic work done on these 13 Wagyus, if you will, with channel samples showing average grades around 1 to 1.5% lithium, with strike extents of these pegmatites, again, visible on surface, anywhere from 100 to 1,800 meters. A 34,000 meter drill program on this project started last summer to try and improve as well as expand those numbers, with most of the assays showing that there is indeed, well, I think all of the assays really showing that there is indeed lithium present here, with highlights from the last news release, including intercepts of 19 meters at 1.3% Li20 at Phi Southwest and 13 meters at 1.24% at the Echo pegmatite. With those are the names of the pegmatites of the Wagyus basically here. But so there's Phi Main, there's the Big East, there's a bunch of other ones. Again, there's 13. And they're also returning similar mineralization since, again, last fall, sort of double-digit widths sometimes, and 1 to 2% lithium grades. Again, although the flagship and most advanced project, this is not the only project. LIFT also has the Cali project, also in the Northwest Territories, but sort of on the other side, on the east side, that is, and it's close to the border with the Yukon. This is also a pegmatite target, but it's a pegmatite dike swarm, which are basically like, I think of them as sort of elongated rock bodies that are filled with pegmatite minerals, basically. The swarm part means that there are a bunch of them next to each other, like the Wagyu basically being cut in long stripes and placed sort of vertically and clustered with a bunch of others within, in this case, it's a range of about 120 meters wide, where there could probably be 5 to 10 of those Wagyu pieces, if you will. Not sure, though, because it hasn't been drilled yet. That's why I'm saying probably. And then, aside from that project, is this really a lithium company if they don't have a project in the James Bay area? Well, they do. That's where PMED found Corvette, so it makes sense to go looking there, I suppose. This Quebec project for LIFT is actually the largest landholding in this region at over 2,300 square kilometers, or about a third of the entire district there. So it's big. Again, this is another undrilled pegmatite target where the Wagyus are supposedly buried under what was left after the glaciers pulled back there. So swamps, lakes, grass, or sediments of all sorts. So again, Project 1, the Wagyus are partially buried and partially at surface. You can sort of see them sticking their heads out from space. Project 2, they're potentially vertically buried under the ground in a cluster, 5 to 10. And Project 3, they're potentially under the leftovers of the glaciers. That's how I think about it. And this is where I want to pick it up from, Francis, because you have multiple projects that you and the technical team all think are promising. The headlines from the Yellowknife drilling say that you're delivering good grades. You're doing a decent job at telling the story both online and at conferences. You were at PDAC. You're doing the Switzerland next week. So at the same time, though, the market doesn't really like the story or the stock, or something is happening because your stock is down 40% over a short period of time, while the price of lithium has kind of stayed flat since December, and it's even up a little bit here over the recent couple of weeks. So yeah, how come?
Well, I think you hit the nail on the head. It's really dependent on the lithium price, and prices have ticked up, but not necessarily to the point where people are coming back in. And I think in 2023, the lithium carbonate price was down about 80%, 80%. So obviously that has an effect on the equities within that commodity space. So when you plot LIFT up versus quite a few of our peers, I think LIFT is down 25% since the start of the year versus quite a few of our peers that are down 50%. So on a relative basis, I think we've actually performed pretty well. but it's really just the state of the market for lithium equities in the exploration phase. I think have been really hammered in the last 6 months or so.
Mm. Well, then that's sort of where I want to take the first part of the conversation to sort of talk about the strategy. Because again, you announce assay results; those holes they cost you money. Drilling costs money, right? But they don't add value to shareholders because they don't add to the market cap. Maybe they add long-term value, but that's what you can talk to me about. But what is the strategy behind all this? Like, why keep drilling as the lithium price is down 80% instead of sort of preserving capital, getting drill targets, and I guess waiting for a better market?
Sure. That's a great question, and I think it's a good thing to talk through. So I think there's two ways to look at it. Like in traditional commodities like gold and copper, I would agree with you because gold and copper have been around forever. There's no necessarily new processing technology that's going to disrupt anything. And so in a bad market, I think it makes sense to shut down and wait for a better market to advance the project. But lithium is a little bit different. It's a new commodity where we've never needed lithium in the quantities that we've needed it before. It's really the electric vehicles and batteries that have driven demand in the lithium space. And it's so new, we're seeing a lot of competition from differing sources of lithium. So we've all talked about brines, or we've heard talk about brines, lithium clays, direct lithium extraction from oil field brines. And so in the longer term, I think there is potential. No one really knows where the lithium space is going to go to and what's going to be the dominant source of lithium. But in the near term, like you were saying, and I like the way that you described it as the Wagyu of lithium. Hard rock lithium deposits are really one of the preferred sources of getting lithium. And what we're trying to do in Lyft is we're prioritizing speed to market over a little bit more dilution in the bottom of the market.
Hmm.
Because the other thing is when, there's the lithium market isn't necessarily that big. And once a lot of players have their deposits, it may become more difficult to actually sell something. So the idea is to try and de-risk it as much as we can. And we'll be looking for good markets, obviously, that we could eventually look at an offer that we might be interested in.
Mm-hmm.
And then on the down part of the markets, then we just keep advancing the project in order to de-risk it to the point where someone wants to buy it.
Hmm. I do want to talk about the potential in your plans for monetizing these assets, but I'm gonna get there sort of in a roundabout way. Is there a royalty on the Yellowknife project?
Yes, there is a royalty to the original vendor of the project.
Okay. Yeah, I'm just checking because it's a long story, but I'm just happy you don't own that royalty personally. You're maybe not as happy about that, but what's a meter of drilling costing you at Yellowknife?
It depends if we're in the summer or the winter, and winter is typically cheaper because everything's frozen and we just drag the drills around.
Hmm.
Except for this winter. This winter, it was 0 degrees in December in the Canadian Arctic, and then it went to
Wow.
-50, -50, and then it went back up to 0 for about 3 weeks. And there's very little snow, so it made operating quite difficult because when you have 0 degrees, it's hard for things to freeze over, and it made things a bit messy. So right now it's about $700 Canadian all in.
Okay.
And that's also the price that we're paying this summer for heli supported drilling.
Oh,
And
wow.
also factored into that is we built a 50-person camp. This is the first drill program that we did this last summer. So obviously the first drill programs are always more expensive than subsequent ones.
Hmm. The terrain there is in sort of swampy because you're also close to a lake, or one of the pegmatites is basically sort of dipping under the lake, if I'm not mistaken. But is the entire terrain like that? Like, is it swampy?
It's typical Canadian shield. So I would say it's less swampy than places like Ontario or Quebec. There's a lot of outcrops sticking out of the ground. And like you were saying in the intro, these lithium pegmatites are veins and they basically stick out of the ground. So there is a lot of outcrop in the area. And when there's a lot of rock, obviously it's not as swampy as if you're sitting under a bog somewhere.
Right. Okay. Well, do you think it's going to be cheaper to drill in Quebec and at the Yukon border as well? Sort of how would those rank basically your three projects that I walked through? How would they rank on a cost of drilling basis?
Quebec will be the cheapest, and in general, diamond drilling in Quebec is one of the cheapest costs for diamond drilling in the world.
Mm.
And there's so many people sitting around in Quebec with diamond drill rigs in their backyard in the Abitibi region. So I think we were drilling for about $550 a meter all in Quebec.
Yeah.
And again, these drill programs, like these are the initial programs that we're doing in new areas. So you have to start from zero basically.
Mm.
And as you go, drilling gets cheaper on an all-in basis.
Right. Okay. And then on the Yukon border, how much is that costing you?
We haven't drilled up there yet, and so that will be more expensive though, just because it is a bit more remote. It's a bit more mountainous, so I would think it'll come in more expensive than Yellowknife.
Fine. Okay. For now, though, the plan, as far as I understand it, is to have an MRE on Yellowknife by the end of Q3 this year.
Yep. So we're not really committing to a timeline. We're saying, it'll be this year at some point, and it really depends on the cutoff of the drilling of what we actually put into the resource estimate. So
Right.
that's we'll drill until mid-April probably, and then that could be one of the cutoff points. And so we could see a resource coming out in the summer. If the market conditions improve, then we could potentially bring in some more money for a summer drill program as well.
Okay. But so far, you've drilled what, 34,000 meters on Yellowknife?
34,000 meters was the summer program from 2023, and so we currently have 4 drill rigs turning, and we'll drill another 18,000 meters on this program.
Okay.
So we'll have it up over 50,000 meters within a few weeks.
Right. Okay. So, but th those 52,000 meters that you're gonna have drilled by the end of April, as you said, that's what you want to have in the MRE. Like you think that's more than enough?
Yeah, I mean we can put out a resource based on what we drilled last year. It's just you always want the resource to be bigger. And the resource gets bigger the more that you drill. So that's always the question is how big do we want the resource to be? And what do the markets look like in order to bring in the capital to execute on those drill programs to get the meters done?
Hmm. What was PMET's first resource? I actually don't follow lithium too closely. It was someone who asked me to interview you, and then I looked into it and it was interesting. So that's why I want to talk to you about. But I have a vague idea of what was happening. So I know obviously the PMET story. What did they have first time around? Was like 110 million tons, something like
Yeah,
that?
exactly. 109 million tons.
Okay. Is that where in that, I mean, relative to that, where do you think you're going to sit? Are you announcing any public guidance or anything like that?
Not really at this point. I mean, we'll come out with a big resource. Patriot is a little bit different than what we have at Yellowknife because we have a whole system of lithium deposits, whereas at Patriot they've got one big one in one place. And so it's a little bit different. It'll take more meters to drill off the same amount of tonnage that Patriot has done.
Hmm.
But I think the logistics are also better than parts of the James Bay region of where we're at in Yellowknife.
Right. Okay. That's also something interesting to talk about maybe later on in terms of how a potential mining operate. Well, let's talk about it right now. How would a potential mining operation look like here? Is it going to be like a couple of small pits sort of mining off the pegmatites? Would you have to even go underground for a portion of it? How do you envision it?
Yeah, I mean, it would be a series of open pits for sure. And I think it's attractive in a way because we have a lot of material just sitting at surface. And from a pitting perspective, the strip ratio on these will be a lot less than if you're going deeper in a pit.
Mhm.
So it's a decent place to be in. There is underground potential, obviously, because of the geometry of the pegmatites. They're dipping 70 degrees. It's a pretty easy thing to mine underground, but the whole thing is that it really depends on the spodumene prices and how much the ore is actually worth. So at these prices, it doesn't make sense to be mining these underground, I don't think. And all you have to do is look at what spodumine's trading at. It's about 8 tons of ore to make a ton of spodumene concentrate, and then that gives you $1 per ton that the ore is worth.
Mm.
And I come from a gold background. I always convert to a gold grade equivalent, and it gives you an idea to compare against what a typical underground gold deposit would be mining.
Right. But you're saying they're dipping 70 degrees, so they're relatively vertical, basically.
Yeah.
Um, Most of the pegmatites you're drilling are now, what are they coming back like? They're not exceptionally thick, basically. They're ranging about sometimes only a few to about a dozen or so meters, with the widest going up to 25 meters, I believe. And then you're talking about, strip ratio. What kind of a strip ratio would you typically envision on this kind of operations?
I think, so some of them are, we've had intersects that true widths of up to around 30 meters. And Big East is one that it's a dike swarm as well.
Mm.
So you've got quite a few dikes that are all coalescing into a big one. And that, just based on the geometry of the strip ratio, it comes out to be, probably between 5 to 10 on the strip ratio if you put a pit down on it. I mean, these are all just very rough numbers, back of the envelope. We haven't done any economic studies yet, except for internal, just back of the envelope things. But I think it's one thing that Yellowknife has is that we are in the Canadian Shield. It's glacially polished outcrops, and it's not like tropical areas where you have rotten rock or weathered rock. And if you think of Brazil, and what you're standing on, if you're out in the jungle, it's a soil basically, or like a decomposed rock.
Mm.
And you would need to strip all of that before you get into lithium bearing bedrock, because spodumene as a mineral, it weathers away very easily in tropical environments.
Right.
So that's part of why the strip ratios are bigger in places like Brazil. Also, we've got very competent rock up here, and the pit walls can be steeper than in other places as well.
Mm.
So I think from a strip ratio perspective, it's going to be pretty favorable, even if the geometries are steeply dipping and they're not 200 meters of true width or something like that.
Right. Well, but I'm thinking about that strip ratio again because you reminded me to think in terms of gold. If you can get the resource, like if I say 1.5% average grade, does that rub you the wrong way? Does that sound reasonable?
I think based on what we've put out, it'll probably be a bit lower than that.
Okay.
But the thing, that lithium is a bit different. Like when you have a gold deposit, the gold is hosted in gold. And when you have a lithium deposit, it's hosted in a number of different lithium minerals.
Mm-hmm.
So you have to really understand what the lithium is hosted in. And like a common thing would be you have a spodumene deposit, but let's say 60 or 70% of the lithium is hosted in spodumene versus 30 or 40% hosted in lepidolite. And so if you have a grade of 1.4%, but only 60% of your lithium is in spodumene, that, the spodumene part of the rock is only grading about 1% at that point. So it's not as simple as like a sulfide deposit where you're getting copper, or a gold deposit where you're getting gold, because the processing of those different lithium minerals are so different.
What kind of recoveries are we typically talking about?
So typically in lithium deposits that are producing a spodumene concentrate, you get around 60% on the dense media separation circuit, especially when starting out. And that's so let's say 60% of the lithium is in spodumene, and then you're getting 60% recoveries on the lithium. I guess you're getting 100% of the spodumene at that point. And so, if you're getting a 1% deposit that all of it is in spodumene, you're capturing all of the spodumene, you basically come out at the same thing.
Okay. Well, so it's not too far off from some gold deposits.
In terms of
terms of recoveries, in terms of what you getting in the final product eventually.
Yeah, I mean, with a gold deposit, I think you'd expect over 90% recoveries.
Yeah.
It's just the nature of the minerals that you're capturing.
Okay. But so I want to go back to a strip ratio, because if you have a gold deposit with a strip ratio of 1 to 1, basically, as far as I understand it right now, if you want to move a ton of rock profitably, you got to have at least 1 gram of gold. They're going to run you about $50. I'm round numbers just so I can make it easier for my 5-year-old brain here. So you move one ton, you get $50. You move 3 tons, you get $150. With a 1% lithium per ton, if it's let's say $15,000 per ton lithium price, which is low, obviously you want to mine it when it's higher. But right now, the way it is right now, you get 150, 1%. So you get $150 worth per ton. But if you have a 5 strip ratio, you have to move 5 tons to get 1 ton out. So that basically places you. So that basically still makes it more challenging at the current prices.
I mean, at current prices, like $1,000 per ton spodumene, you have to have paid off your capex, or be way well into paying your capex to make it work, I think.
Mhm.
And like established mining operations like Greenbushes or Pilgangoora have cash costs, I think, of $600 a ton approximately. So like even in $1,000 per ton price environment, they're still making money.
Okay.
And but yeah, the 5-to-1 strip ratio, I mean, I think of it as like a mining cost. A open pit mining cost in Canada is call it about $3 a ton. And if you're moving $15 of rock, call it for a 5-to-1 strip ratio. In order to get 1 ton of rock that's worth $150, you're spending $15 to mine the waste rock.
With that $3 per ton to move the rock, would that be the same up in Yellowknife? Because it's that much up north?
There's probably some more maintenance costs. Like the only issue with mining in the north is the cold weather,
Hmm.
and things just break in minus 50 degrees. And so like that might increase the costs a bit, but like this is all things you can look at. It's not that much different than northern Quebec, and minus 30 in northern Quebec versus minus 40 in Yellowknife. There's not that much difference,
Okay.
and it's just a northern Canadian uh, aspect that you have to deal with.
But given that you can operate year round, I also assume that if there is a mining operation there, it would still be able to operate year round, right?
Yep. There's lots of open pit mining operations in the north. So the Diavik and Acadie diamond mines have been in production since the late 90s, early 2000s. Agnico is operating Meadowbank and Meliadine. I can't remember if that's got an open pit on it. But these are, there's lots of operations. Mary River in Baffin Island, Nanisivik in Nunavut as well. So like there's a lot of precedent for this.
Okay. This is the presence of that lake that I mentioned a couple of times. I just saw the lake on some of your maps and on that drone footage that you'd taken. Does that make it more complex in terms of operations, either now during exploration or even during potential production?
The only issue with lakes is that it takes a bit more to permit draining lakes. And most places in the Canadian Shield, a lot of them have some kind of issue with lakes. And it might not be exactly where the pit is, but you might want to look at putting tailings in a lake. And as an example of this, I worked up at the Hope Bay deposit in Nunavut. So that was with Newmont at the time. And I think there was a couple lakes that were drained in order to put waste rock or tailings in. And, it makes sense to do it that way. And in terms of lakes, it's really, if they're fish bearing, I think that triggers a different part of the permitting process. But from an operational standpoint, it makes no difference. They're fine to work on in the winter as long as you have enough ice. You can drill from lakes. And then I guess the issue is when you come to draining them. that's where, there's just a bit more meat in the permitting process in order to do that.
Right. How deep is that lake?
I'm not sure which lake you're referring to, but
How many lakes do you have?
there's on by Maine, there's a couple lakes, but they're like 300 meters wide or something. You can see the bottom of them from the helicopter. It's not like it's a 20-kilometer long lake that's 30 meters deep. These are, a couple meters deep and a couple hundred meters across.
Hmm.
So they're not really, I don't see them as being an issue. And like I said, there's a lot of deposits and there's a lot of precedent for this, that there are small lakes around them.
Right. I'm looking at the pictures right now. The one that's close to camp, basically. So sort of at the end of one of the spots you mean. Yeah, one of the spots you means.
If it's to the west of the camp, then we're very far away from that. Like we're multiple kilometers away from that lake.
Mhm.
And if there's smaller lakes, then there are other ones scattered around.
Right. Okay.
Yeah.
Just as long as you don't have to drain the Great Slave, that's fine.
Yeah, well, I mean, the only reason you need to drain a lake is if your open pit is going to be within the lake, right? So,
Yeah.
as long as there's no lakes within the open pit design, then you don't need to drain them.
Okay, sure. Are you doing any met work this year?
Yeah, we collected 9 tons of rock from 8 of the pegmatites, and so that met work is ongoing right now,
Hmm.
and we expect to put that out to the market probably midway through this year at some point.
Okay. But the next news releases are still going to be assays then from the current 18,000-meter drilling.
Yep, that's right.
Good. Well, but to finish that drilling at $750 a meter, you need 13.5 million bucks. You have enough to finish all that?
Yeah, we started the year with 18 million. So we've obviously we're drilling, we're putting money into the ground, so we're depleting our cash, but we were funded to do this drill program at the start
Okay.
of the year.
Funded to then finish the MRE study. Are you doing that in-house?
We'll have an external QP, or we have a I think SGS is doing it for us.
Okay. But that's still funded to have that completed, have it out to market, basically.
Yeah.
Okay, good. How far up the Lausanne curve, basically, do you think you have to take the Yellowknife project before you monetize it? And then we can talk about what monetization actually looks like.
Sure. So the Lassonde curve, obviously you get the big jump on a discovery. And the Yellowknife project is a bit of an oddity just because there's been a lot of historic work done before and the deposits literally stick out of the ground like we've been talking about. So we raised $35 million at around a $350 million valuation without drilling a hole. And it was just based on seeing the scale of it. And this is always the issue when you're an exploration company, is getting people to understand the scale of what you have. So it's really an art if you can do this with, you have a piece of rock, you have one little outcrop, and you can convince people that this is a world-class deposit. Whereas with Yellowknife, it was very easy to convince people that this was significant, again, just because they stick out of the ground. And so where are we on the Lassonde curve? I mean, I think we started at the top, where the speculation part of it kicks in, just because people see the surface area. It's like, how big is this going to be? And we're in that stage of drilling it out and really understanding the geometry of the mineralization, how continuous it is. And I think, like you said, we're putting out news releases every week, and it's pretty consistent in terms of the grades and thicknesses that we're seeing.
Hmm.
So I would say we're um, on that upper part of the Lassonde curve. How far do we have to take it? I think a major mining company would typically want to come in when it's been de-risked from a number of different perspectives. And so, metallurgy is a big checkbox. the resource estimate, coming out with some kind of economic study to show that it's all viable. The more that you can get done on the permitting process, obviously that's better. Getting an agreement in place with First Nations obviously is a big one as well. So, there's all these steps that go towards de-risking a project, and I think it really just depends on where you are in the market. If people are hot on looking at lithium assets and M&A is really starting to cook, then you can see people coming in at earlier stages, and we did see that in Western Australia last year.
Right. But in any case, you don't think it's happening before the PEA?
For lift
Y-
specifically right now?
Yeah, well, for Yellowknife specifically.
Yeah.
Yeah.
I mean, right now it's for us, it's not really attractive to be thinking about any kind of transaction at this point because we think that the market is at the bottom and the value that's there is being mispriced at this point. So, I don't see why it would make any sense to be considering something like that right now.
Sure. Well, I tend to agree with that, although I am known for selling bottoms myself. But you're mentioning a major company here. Maybe we can expand a little bit more on that, on potential for monetization. What does that look like? Do you get a strategic in to help you fund that drilling between MRE and PEA? Are you hoping for an outright sale eventually and just fund it yourself all the way through? How do you see that developing?
I think it all just depends on the market. And so there's two parts to that. There's like how do you fund the project going forward, and then the second part is when do you monetize. So the part about how do you fund it, I think right now at the bottom of the market, it makes sense to be looking for strategic money, just because we see that the equity capital markets are almost closed at this point. So like that's obviously a good strategy to be employing at this point. I don't think it would have made sense, let's call it 16 months ago at the top of the market. There'd be no reason to be looking for that strategic capital at that point because the capital markets were flowing. And, it all really just depends on, like I said, where you're at in the market. So we'll just continue to monitor that. And then the second part to the question of when do you sell, who do you sell to? And I think you have to look at the lithium space and see who's participating in it. And, we've seen GM come into Thacker Pass. We're seeing, other OEMs getting into the lithium space. And then there's obviously the lithium producers who have been traditionally producing lithium, like SQM and Albemarle. And then you have a number of new players coming into the space. So like Rio Tinto has been trying to get the Jadar deposit going in Serbia, but they've also publicly said that they're looking at Canadian lithium assets. So it really depends on who are the players in the space at the time of what makes sense. And then the other part to that is like we will just keep pushing the project forward until we get an offer that we like. And if it means that we're going to put it into production, then we'll just keep pushing it down that path.
Okay. And permitting again, part of that as well, as you mentioned earlier. I was at PDAC too, and I mentioned earlier in a video that it's kind of funny to go to these parties. They're basically open bar. They're just free alcohol type of places, and so a lot of the CEOs really enjoy it. And I was talking to someone who was a little bit tipsy, put it mildly. And he was saying, if you see anything in the Northwestern Territories, none of it and whatever, just ignore it for the time being. It's not getting permitted. And I was asking, like, okay, tell me more. Why is that? Where are you coming from? I got no information. So I want to ask you that. Is that true? Is it really that challenging to get any permits up there?
I mean, I think it's just really looking at the mines that have been built. And there have been mines that have been built in the Northwest Territories and Nunavut. So I would argue against that, and the proof is in the pudding. Every different province has its own permitting bodies and a different permitting process. So I don't know if I would say from my experience so far that Northwest Territories will be the easiest place But the thing that you have to keep in mind in the Northwest Territories specifically is that it is a mining territory, and gold mining fueled the expansion of settlement in the Northwest Territories in the 50s until the 80s. So the Con and Giant gold mines in Yellowknife produced about 15 million ounces of gold. And then the gold mine shut, people started moving away, and then all of a sudden diamonds were discovered in the early 90s. And so for the next 30 years, diamonds have been fueling the economy of the Northwest Territories. And so all of the producing diamond mines are slated for shutdown around the end of this decade. Diavik is shutting down in 2026. Rio Tinto is actively getting ready for that. And when you look at the territory, there's going to be a big hole if there's no more mines brought online. So we have quite a bit of interest from the territorial government, and also just normal people in the Yellowknife area, because they understand that mining is the lifeblood of Yellowknife and the Northwest Territories. And so I think as long as you get in front of these things and you don't screw something up in the beginning, then the permitting process can be navigated in an expeditious way.
There's a little bit of a bad history too with Yellowknife, if I'm not mistaken, in terms of mining. How's the current generation, like when you go up there and you talk to them, how are they receptive to what you're saying? What kind of questions are they asking you?
Yeah, so the Giant gold mine in Yellowknife would be one of those black eyes on the mining space, especially in the north. And so Giant produced gold, I think, from the 50s till 1989. And there was a lot of arsenopyrite, so a lot of arsenic with the gold ore. And they had a roaster up there. And so they're basically just like shooting arsenic-rich dust out all over the place. And so obviously that has a lot of health effects. There's a lot of people, especially in First Nations and Indigenous people that we've talked to, that, either they've had arsenic poisoning or someone in their family has. And so, yeah, there is a negative part to mining in the Northwest Territories. But the flip side of this is that the diamond mines have been operating for about 25 years now, and they're probably, and I've heard estimates between 25 and 40% of the GDP of the Northwest Territories. And so you think about how many people that's actually touching. I mean, if 40% of your GDP is coming out of mining, then it's touching pretty much everybody.
Yeah.
And that means that it's not just somebody, but one of your family members is employed in the mining business. So there is a negative history in some point, but I think the diamond mines have at least helped out a little bit with that, bringing positivity in the last 30 years.
And so your responsibility here is to basically tell the story, as in, we don't have arsenopyrite, the different regulations, tailings work differently now, so that type of stuff.
Sure. Yeah, exactly. And it's an easy story to tell just because spodumene is not within a sulfide mineral. And when I say sulfide, it's, the shiny fool's gold. And that's typically where you get zinc, copper, gold, but you get nasties like arsenic and antimony and things like that kicking around. But with spodumene, it's a rock forming mineral. And the way I explain it to people, it's like a granite. And you have quartz, you have feldspar, which is inert, and then you have spodumene. So the tailings are typically dry stacked. There's no real acid rock drainage coming out of the actual pegmatites or the ore. And what we did in one of the community meetings was we took the MSDS sheet up. And so I don't know if everyone's familiar with this, but it's material safety. I don't know what the D is sheet, but it basically lists all of the dangerous aspects of a certain substance. And with spodumene, it's non-reactive, non-flammable, everything basically. So it's basically like you're shipping a gravel out of there.
Okay, yeah. I just looked it up. It's material safety data sheet.
Yeah, there you go.
One, yeah.
Yeah.
It's a document that contains information. I'm just reading. It's a document that contains information on the potential hazards So health, fire, reactivity, environmental, and how to work safely with chemical products. Yeah. Okay.
Yep.
Good. What else is happening in this year in the Northwestern Territories? You going up to the Yukon border, or what else is happening?
Yeah, so we did an exploration program there last year in the summer, and so we'll be putting out some news on that pretty shortly, I think. And like you were saying, I loved the Wagyu part, and I think the way that I would describe it, it's like a zebra, and you've got a lot of stripes where you've got all these different veins or pegmatites that have lithium in them.
Hmm.
And so what we were seeing is on the ground is that they're more extensive than what's been noted in the past, and there's quite a bit more of them. But the thing is we don't know how many there are. We don't know how wide they are. We'll need to drill in order to find that out. And so that's something that we are considering doing this summer.
Hmm. Right. When do you think you're going to have more concrete plans on that?
I think it all really depends on what the market's looking like. So, we'll have to bring some more money in at some point in order to go out and do that.
Right. Well, what part of that money that you would potentially have to bring in, could that be any type of government grants like NWT specific grants or something like that?
There are grants, and we did get one last year,
Right.
but the amount is not really significant in terms of a
Mm.
drill program. So I think it was 2 or 300,000, and I could be mistaken, but that's an order of magnitude. But it's not like the government's handing out a $10 million check to go out and do a big drill program.
Hmm. So you basically need better lobbyists because in the US, some of these lithium companies, especially at the height of the cycle, they're getting like, dozens of millions of dollars basically. So that's interesting. What about Quebec? Any money to be had in Quebec?
So Quebec, we have a big greenfields play. Like you said, it was 2,300 square kilometers. We've been out doing some surface work. We're still getting results in from that surface work, and so we'll be putting an update out on that as soon as we have all the results in. We're seeing some interesting things that we want to follow up on, but it's going to take a little more to shake something out there. And it's a more difficult environment because there's a lot of swamp, there's a lot of bog. It's not like you've got all this beautiful fresh outcrop sticking out of the ground, but that cuts both ways. It's harder to find them, but then you can also hide some huge deposits that way. And that's kind of what we're going out and looking for is really big deposits in similar geology to known deposits already, like the Whabouchi deposit and the James Bay deposit that Arcadium owns. And we're in the exact same geology as those. So we're just going out and looking for these things underneath some kind of cover.
Maybe this is a point where we can sort of circle back to the strategy of it all, but it's a huge land package. It's Canada, so it's not crazy expensive to hold it, but it's not free either, I don't assume. I mean, you still have to do some work on it. Um, why not option it or outright sell it? I mean, is that something you would consider?
It would be, but getting some kind of deal that you want at the bottom of the market is more difficult. So again, it just comes back to the market conditions. You can look at it a number of ways, right? Like you could, at the bottom of the market, put together a number of different land packages and make it like a consolidation play. But for us, I mean, we have a massive land package. I think we're just on the cusp of really unlocking the value out of it. So I don't think it necessarily makes sense at this point to be doing something.
Hmm.
And like, let's say we put in another, I don't know, 500,000 or $1 million and we make a brand new discovery. Lyft would get more value out of it if we do it ourselves rather than transacting on it and putting it into another company.
Well, for sure, there's technically going to be more value within the company, but do you think the market is going to give you any value that's going to get your cost of capital lower? I suppose that's sort of where the question comes in.
Well, you can look at it. It's the Quebec and Yellowknife aren't necessarily synergistic because they're just so far away across the country. And if we made a new discovery in Quebec, maybe at that point it would make sense to do a spin out, do some kind of transaction. But where we're at right now, I think that we could realize a lot more value within the company just by doing a bit more work ourselves.
That's a fair point. Yeah. What about the stuff that you have going on with Knorland? I didn't look too much into it because I know it's not a focus, but what sort of do you have any updates on that?
Well, so I'm one of the founders of Knorland Minerals, and I was when I left Knorland, I was the president, and so right now I'm a technical advisor to Knorland, but I'm not involved in the day-to-day management at this point.
Right. Okay. Um, what else? What are you budgeting for G&A? The 180-ish that I said per month from last year. Is that what you're budgeting this year?
I think we're a bit higher this year because we brought on a couple more people, and I was thinking through the numbers in your head, in that you were talking about in my head when I was talking, or when you were talking about them, and the spend. I think we're actually quite a bit higher. I think we spent, it would be about 37 million last year. So I think the G&A to spend ratio is actually about 10 to 1 last year, on the full calendar year.
Well, I was looking at it. I have it open here. I was looking at it from I was looking at the 9 months that ended August 31. So there was actually before, um,
Sure.
before the
There
drill
was
program was
we
completed. So,
Yeah, exactly. And we ramped up to 6 drill rigs in September and October. So
oh,
it was
okay. So
quite
the
a slow
full year,
spend.
what you probably have the full year financials coming out soon, then I assume.
Yeah, yeah,
Okay.
exactly.
Yeah, that's going to give a better perspective. That's why I always say, forward-looking statements, and people should read these things and pay attention to when the most up-to-date financials have come out because things change within companies. Again, the numbers that I was talking about was the end of August, so quite different. There's also a big marketing push last year, as if I remember correctly. Are you expecting to market sort of at the same tempo in terms of conferences and online activity, or are you doing more or less? How do you look at that?
I think we've toned it down a bit in the bottom of the market. So, it goes back to that same kind of caveat, is it really depends on what the market is looking like.
Hmm.
And so, we'll just feel it out, see what's working, what's not working, and if it makes sense to be marketing, then we'll definitely push on the gas a little bit. But at this point, I don't think it's going to make much of a difference until the market really turns.
And it's all these things are kind of tricky when you're trying to work with or against the market, basically, because if nobody's marketing, then maybe it makes sense for you to be the only one out there,
Sure.
screaming out the top of your lungs.
Yep.
So that's a strategy part, I suppose. But yeah, no, Francis, this has been a good overview. I know you have to run here, but I've been through most of my questions anyways. What am I forgetting to ask you? What did you come here hoping to talk about, but I'm not bringing up?
I think we covered most of it. It was definitely a good overview.
Good. Well, thanks so much for doing this, and I'm looking forward to seeing you in about a week.